Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the EdgeFinder, completely for free. Now how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the EdgeFinder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the EdgeFinder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the EdgeFinder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Sorry, had to unmute. Welcome back, everybody. Thanks for being here, and happy Thursday to you. Hope you're all doing well. Just going to do my check. Looks like my speaker or my microphone should be set correctly. Let me know if there's any sound or video issues, but we should be good to go. So we've got another red, excuse me, another red start to the day here. S&P 500 is lower, continuing its pattern. I mean, this 4-hour downward trend chart just continues to hold, at least for now. This level of resistance yesterday that was retested looked very, very weak, right? The price action here from the bulls, not very constructive. And now we are testing the possibility of a break back down to the prior lows, which, by the way, if we were to take out those prior lows, what that would signal is that we completely erased all of the hype or the excitement around the Trump post in regards to a possible ceasefire discussion. And it doesn't seem that far away because this morning we had some news. Excuse me. Let me see if I can just pull up CNBC. I saw it on their website. Trump says Iranian negotiators better get serious soon before it is too late. I mean, I saw that and I'm like, okay, so basically Trump threw out the, let's negotiate card, and there's not been much progress there. That's at least what that sounds like, right? And so the market sees that and says, okay, yeah, that ceasefire concept right now isn't looking very likely. In fact, it feels exactly how the first opening week of this situation played out. If you think about this, guys, if you remember, excuse me, I got something in my throat. If you remember when this first started, military action or military personnel stuff was moved into the region while the negotiations between the U.S. and Iran were still taking place. And then the strikes happened right after, right? The negotiations didn't make the sort of progress that was hoped for. And so, it was almost like this preemptive preparation by the military to be in the region. And then it turned into, what we've got now. And so you look at that and you say, okay, it's almost like repeating right now. It almost looks like you have this setup for some kind of ground incursion into the region. And so the market seems to be figuring that out. I mean, take a look at oil prices. They're up 3% today. You're at $94 a barrel on US WTI. If you take a look at UK oil, you're looking at UK oil at 101. So you have oil up. You have stocks down. I mean, that's the story. You could just pretty much chalk up this market right now to, if oil is red, stocks are green. If oil is green, stocks are red. It is almost that easy right now. And I don't say easy because it's not easy to, or I shouldn't say easy because it's not easy to predict what's going to happen with this stuff. But again, we come back to the stance that we have had on the show for some time, which is there is no easy, one-sided resolution like there was with the tariff stuff. When the tariff stuff was going on, at any point, the Trump administration had the ability to look at the stock market falling and say, not comfortable with that, and walk something back, right, where they needed to. And they were able to do that, which saved the stock market, right? I mean, you could make the argument that they, were the cause of the downturn, but then also they were the start to the rally. It depends who you ask and their political affiliations, to be completely honest. However, the long story short is over here, I was buying the dip on the stock market because my thought process was Trump's not going to like the stock market being down. He just doesn't, right? He's a real estate guy, an interest rates guy, a stock market guy. And so, you look at that stance from Trump and you say, well, okay, he's going to do what he can to walk it back. And in fact, that is what happened. Now, you could argue that in many ways, some of the tariff progress could be good for U.S. trade, et cetera. I'm not saying it's entirely bad what was attempted there. I think trade dynamics for U.S. Have been disproportionately, to some extent, unfavorable to U.S. We have a massive, massive deficit. And so there is that. But anyways, the point is, when the pain got too much, Trump could walk it back. How can Trump do that here? Can he walk back the war in the Middle East? Kind of, but not really. Why? Because Iran has a say, right? You don't get to just call it off when you're ready. You also have, in a geopolitical conflict like this, there's multiple parties involved. There's Israel, there's Iran, there's the US, there's Saudi Arabia, there's Lebanon, there's all sorts of different players here. And the cat's out of the bag. So it's hard to just put a stop to it overnight. And so in the meantime, the market's like, well, every day that this thing goes on and there's facilities and infrastructure damaged, you're talking about more and more damage that's going to take time to repair for oil inventories, et cetera. So we look at this, we say, okay, oil price is, in my opinion, unlikely. I don't think it's very likely that you're going to see oil price shoot right back down to, mid 50s again anytime soon. I think most likely you have a bid on oil for a while, even if this geopolitical conflict does come to an end. And so the market is wrestling with the idea of, well, that ingrains more inflation in the system for a little while. If energy prices are going to stay high, we have a challenging circumstance here. In just a few minutes, guys, we do have unemployment claims coming out, which I'm very interested to see if that does any, anything to the market. Sometimes it does, sometimes it doesn't. But you do have just a few minutes to go before unemployment claims do drop. We'll see what that does. Here's that headline I mentioned earlier. Trump says the Iranian negotiators are very different and strange. They are, let's just pull this up. They are begging to make a deal. And again, we've been kind of seeing this back and forth. But at least from the Iranian side, it seems like there's not a very willing to make a ceasefire language like it kind of feels like from the U.S. side. Of course, the U.S. also is like, in terms of who has the strength here, it's obviously the U.S. The military in the region is massive, but at the same time, this choke point, this one spot, the Strait of Hormuz, and inflation worries, etc., are also a powerful weapon that, an economic weapon, really, that Iran is kind of using in response. Gold is back down here a little bit today, guys. I mentioned yesterday I closed out that cash secured put that I shorted on gold. I made a 47% profit on that in 2 days, which felt really awesome. Of course, 47% of max profit on a cash secured put. So it was a nice little profit, but What I'm looking for now is if gold continues to push lower, if you get it down 2-3% day in gold, I may just put that cash secured put on back on for extend that duration out, collect more premium, and just keep playing that. So I sold the 360 puts on GLD and then bought to cover them yesterday for a nice profit. Now GLD back down today. That implied volatility on precious metals is still pretty high, so I could probably get some decent premium out there. Okay, so check this out. S&P 500 also has lost its 200-day moving average pretty decisively now, right? We've been kind of hovering. We've been retesting it. But I have to say, it just feels like right now, there's not a bid on this market. If you've traded Nasdaq, S&P, et cetera, in the last year since the tariff lows, you know what a bid in the market looks like. If Asian session is red, New York session is screaming green. If New York session is screaming green, then it just keeps getting more green, right? Like that's what a bid in the market looks like. When people feel really comfortable buying stocks, they just keep doing it and doing it and doing it. And right now, you have the opposite. Every time you see green, it feels like 12 hours later, that green is gone and it's turned red. And that's been the theme for some time. I've highlighted this really simple 4-hour technical chart. Look how simple this is in terms of, at least now, how price is just very coordinated, regimented selling. Every time you get the pop, you get the drop that comes in. Sellers are coming in, and there seems like every time there is some kind of move higher, there seems to be de-risking that is going on. If you're an institutional trader holding money for clients in different places, there's a good chance that a lot of them are taking pops in the market as opportunities to de-risk, because of the simple truth that nobody knows exactly what's going to happen next in the Middle East. Until that changes, I've said it, I'll keep saying it, it's a seller's market, right? As long as you have this giant overhang of geopolitical uncertainty that is killing probabilities for rate cuts, that's going to cause investors and traders alike to be like, hey, we can't put the same price to earnings valuations on tech stocks anymore. We can't value software and tech and all the semiconductor trade. We can't keep those expectations so high, and that is the challenge of it. Yeah, tons of counterparty risk, making it hard to get a good read on the situation. It is indeed. I mean, and that's the thing, right? The Iranian situation, the headlines are so fast, they're changing so quickly. You get Trump says this, and then Iran says this, and they're going back and forth, and they change narratives constantly. And it's like, who do you believe? And in my opinion, regardless of who you choose to believe, etc., the market just isn't having any of it. The market's saying, there's no certainty here. There's no, like, this thing could go on. This thing could, there could be a ground invasion. They could continue to swear to the end that they're not going to. I mean, Iran does not mess around. I mean, we have had conflict with Iran, US, Iran, Israel, the whole region for decades, right? So it is a challenging circumstance, to say the least. Guys, we have about 30 seconds here to go, and then we're going to get unemployment claims this morning, see if that does anything to this market. Sometimes it does, sometimes it does not. We're expecting 211,000 unemployment claims reported this morning. If you get something more, that is dollar week, right? You want less claims for unemployment. That's a more positive thing for the labor market, and vice versa. So we got that about 20 seconds. And then what we'll do is, yes, we will bring in my friend Chris Pulver to take a look at some markets with me and see if we've got anything popping out here this morning. Again, unemployment claims coming in here in the next few seconds. Just going to switch over here and then get this going. Hey, Chris.
Good morning.
How's it going, man?
All right. I'm actually live from North Carolina today.
North Carolina. All right.
Yeah.
You're all over the place.
Yeah, it's just me and the kid. He's sleeping just on the hall, so I might have to go grab him in a second. But so far, so good. With the time adjustment, he still should be sleeping. So anyway, dude, I listened to the last 15, 20 minutes with you. You said so many fantastic things that were right in line with everything I said. The 4-hour chart, it definitely looks like a seller's market. gapping lower today. I mean, almost 0.9% on futures. Just structurally, looking at the pop from Sunday to Monday, that Monday move, that's kind of the structure I'm watching to see, will the market take that out? Trump's on the calendar today at 4 p.m. He did this a couple of weeks ago where he spoke before the calendar said he was going to. So I think if the market, it's a really crazy like seesaw market. If the market is down, Trump's probably going to say something. But when you said just watching oil, if oil is up, it's probably not a good sign for equities. If oil's down, probably a good sign for equities. That's kind of the dichotomy we're working with right now.
Yeah, and that's a good point about the seesaw market. I mean, this is why being short is so hard in this environment, because if you're the president, right, in this circumstance, and you have this market that is just every morning is bleeding back lower. You have a situation where every time that happens, there's a pop here that is incentivized, right? Because of course the president, whoever, does not want the market to fall apart. So there's this active attempt to help the market. And who knows, Iran said we've not been in contact with the US, despite Trump saying that they had been. Who knows exactly if there was some gray area there, if there were some conversations, if there were not, if they were overstated, etc. But Trump might have taken the first, even acknowledgement of each other as an opportunity to try and help the market out that day, because we were dumping down in the open market again. So it's challenging to try and be short here, because again, I think that the easier short, and nothing on the short side is easy, but the easier short would be to, as I've done a couple times here in recent weeks, fade the pops, not try and chase the drops.
That's a great strategy. I mean, for the bull side, you can see just with that pop on, that would be Monday. I mean, we need to reclaim that. If the bulls have any sign of taking over control, we've got to get above that 6,700 handle. And I think there's opportunity to de-risk, deleverage. That's essentially what I'm planning on doing. I mean, I think that possibly what we saw with this Monday move is that Trump's put is 10%, meaning if we hit double digits, it just gets worse and worse for the sentiment around the administration. What are you doing around this administration? This doesn't make any sense. And on top of that, I mean, there is an interesting amount of like growing dissent about like market manipulation that's clearly happening. I mean, are you reading stuff about like the prediction markets having wallets opening right before these major events?
I have been seeing,
and then people are making millions and millions of dollars on oil futures or gold or the stock market. It's like just such short term. And whether it is truly insider trading, I mean, there was an enforcer that just resigned from the SEC because they were looking to probe inside the insiders, the insider circle and Trump. It's like,
wow,
whether this is true or not, it just the optics of it looks so bad. And somebody actually posted an article about the fall of any government has been when you have a nonviolent mass of 3.5% of the population is willing to protest. Nonviolent. But it's like, we only need about 12 million more people to be willing to protest. It's like, so it's, again, there's a lot of stuff going on in the background. It is a super noisy market, but like you did a great job pointing out, we are making lower highs and lower lows. The bulls can reclaim at really any time. It's just, they don't have the ammunition to do it. They don't have the evidence to do it. There's clearly no price evidence. There's no constructive fundamental evidence. It's like, all we're hanging on to right now, Nick, is I guess the earnings are decent, but like they're being lowered. Like the expectations are being lowered as they should be. I think the bar is being set lower so we can still have decent expectations. But man, it is a tough market for the bulls right now. And that doesn't make me a bear necessarily, but I am very happy that I started this year out very cautiously. And so I think that like kind of 10 to 15% soft spot for the market is going to be a real tell of how ugly this gets, or how, maybe resilient we are, but we're probably going to test it.
Yeah. I mean, we've got Bitcoin back down below 70,000 here this morning. You've got oil here up above 94. And again, I was saying this earlier, but the challenge with oil is the whole, situation in the Middle East, the infrastructure destruction, et cetera. And also just the uncertainty of how long this thing could go on, just keeps elevating the price of oil. And as long as that remains bid, I mean, that's just a structural input to everything else that, this market just does not want to be higher, right? Because if you're thinking about, I know we've pointed this out many times, but for listeners who haven't been as tuned in recently, take a weekly chart, look at the S&P 500, I'm sorry, the oil chart, right? And actually we could do this study. So I'm gonna take my moving averages and I'm just going to cross over this, the S&P 500. And what we can see here is that generally speaking, we have celebrated in recent years inflation coming down, interest rates cutting, or central banks cutting interest rates. And you can see in blue, that's the S&P 500, and the candles is oil. Oil has been trending lower, and it has been a nice tailwind to what has been a bullish stock market. Again, spikes in oil prices are a very dramatic, volatile input cost to the economy. If suddenly everybody's gas price doubles when they're at the pump, it does a meaningful amount of damage to the average everyday person's spending abilities outside of just filling up their gas tank and putting food on the table. So it can very quickly put pain back in the consumer, which by the way, the consumer was already kind of feeling some pain due to the high prices that we've seen in recent years. Yeah.
6 years worth. I mean, this is, we've all been feeling it since COVID. It's like it's sustained, it's persistent. It's not just US, it's global, but like oil is literally in everything. And I don't think getting a data point like CPI, PPI in the next 30 days is going to be a real reflection of like how instantaneous this was felt. Right. I mean, you watch pay at the pump go from $2.60 a gallon to $3.80 a gallon. You watch it in your hometown, you watch it nationwide, you look at AAA gas prices. You're going to see grocery store prices probably go up, everyday staples, everything you need or want. It's like prices are not going to go down with this type of environment. So anyway, I think investors just need to embrace the sustained volatility. I think we need to be patient for better opportunities. If you're in the trenches right now, you're probably short-term bearish, or like today, for example, we're going to be opening lower. A couple of things I'm looking at trading. It would be either trying to get some short-term bottoms. The easy trade would be try to go out of the money, sell some bear call spreads and not worry about it. And that the market falls and continues to push, lower than 1%. I'm not trying to catch the bottom. But I've already gone out to like a 3% level and thought, well, we've had a lot of containment around that 3% sell off in a single day. I do think the underbelly of the market is really vulnerable, but I don't know. This structure to me is we have a low, we had a high. Sorry, my mouse pad is a coloring book.
It's all good.
So we have a low to a high, and we're going to be gapping to kind of retest this level from Tuesday. So if we gap lower and we instantly go back up, it's just this transition zone in the gamma levels. This is between 65 support. The Friday lows around 64.73, and we have this positive negative gamma pivot around 66.05. So my bear call spreads this morning would be far out of the money. So if we rally all morning, then I got to go grab my kid. If we rally all morning, we probably have the ability to kind of get some premium and sell that, but I would just be selling as high as possible. I don't think today's going to be a rip unless Trump says otherwise, but that would be before the market closes.
Got you. Chris, you go take care of the kid. I got it for a little bit. All good.
All right, dude.
Yeah.
All right. Thanks, man.
See you, man. Yeah, guys, in terms of where we are at with what Chris was pointing out, that 3% threshold that he was discussing, I thought that was a good idea, or good thought, right? When we take a look at these sell-offs, there has seemingly been and Chris is pointing that out because he does a lot of zero DTE options selling, right? So basically he'll try and map out how far he thinks the move will be on a particular day. And so he was pointing out that 3% seems to be an extended move that he thinks is unlikely to take place. And that has been fairly accurate. You take a look at this move was 2.4%, right? Then we had, let's see, another big move to the downside. That whole move, the whole day was 2.4%. So he's talking about selling options outside of the 3% range on a zero DTE basis. So makes total sense. So I think generally speaking, my thought process on this market, and I want to be careful that I don't come across as too bearish on it, but right now I do think that in the short run, I've said it for a few weeks now, this is a real in my view, a real reason to be cautious on stocks. Geopolitical uncertainty, oil prices just persistently being bid. It's going to be, at least it has been, and is likely to continue to be as long as this remains unquestioned or unchanged. A dollar bullish story, a yields higher story, interest rate cuts getting slashed, and that's going to be bearish stocks and bearish gold. I know it's kind of a, it's almost like as simple as that until that changes, right? At some point, sure, it will change. At some point, there will be some acknowledgement, let's hope, from Iran that, hey, here are our demands, et cetera. And the US and Iran can find some kind of way to put a stop to it. I think the US wants a deal. I think Iran probably does too, but is playing harder to get. So we'll see how that plays out. And in the meantime, again, as long as this circumstance remains the same, I think you have a bid on the dollar. I think you have, and of course, the dollar strength comes from the idea that if US-Iran keeps going, there is a disproportionate, we've been talking about this, there's two main reasons why dollar strength is so attractive right now, which is interest rate probabilities getting cut in the US. That was a big story for 2026 that is completely getting ripped apart. We were going to cut rates 2-3 times this year, falling inflation, slowing jobs market. That story has been corrupted by huge surge in oil prices, inflation rising. And by the way, this is something the Trump administration very much didn't like. They wanted a weaker dollar. Now they're getting a stronger dollar. They're getting interest rates going up. There's possibilities of a rate hike by end of year, according to the bond market now. So you look at that and you say, okay, so that's very dollar bullish, because so it's the interest rate story that's very dollar bullish. The other dollar bullish side of this, look at a few charts really quick. Let's do a study. We can do this study. We can be smart about this. Let's say we're looking at hold on, let's go S&P 500, and then let's compare this really well. You know what? Let's do SPX. We'll pull up SPX. And then we're going to add a few charts, okay? So let's look at UK stock market in comparison. Let's look at, what else can we do? We can add the Japanese stock market to this. We can take a look at Hang Seng Index. Let's look at, I don't know, let's add another one. I'm trying to think of stocks index. Stocks, we'll just do, well, actually, let's just do the DAX. Let's do German 40. And so with that said, right, that's going to be big contenders. Watch this. So this all started, let's go to a 4-hour chart, and let's go to, let's just say end of February, start of March, right? So when, does anybody have the exact date for me? If you could give me the date of when this conflict first started, that would be really awesome. I believe it was like right in start of March, I want to say, but I'm blanking. Anyways, March, generally speaking, this shows the point that I wanted to get to, which is, and which one is this? Is a Hang Seng? Okay. Generally speaking, 28th of February. Okay, thank you. 28th of February is going to be right, we'll call it the Friday, right there. That's the, okay, perfect. So go with me here. You might be saying, why is this strong for the dollar, or strong relatively for the dollar? Very simple. This is a more challenging circumstance for countries that are energy dependent on other nations, other parts of the world for their oil. The US is energy independent. The US is a net exporter of oil. And so you look at that and you say, okay, so the US, like everyone else, doesn't like oil prices spiking. Inflation is not good for anyone. But remember that from a purely pain point, this is more disproportionately hurtful to nations who are more reliant on the Middle East for oil. So look at this. When we look at, let's take the Hang Seng, because I'll get back to that in just a second. It's actually impressively holding up a little bit better. The Nikkei, right? Which one is the Nikkei? The Nikkei is going to be your green. Look at the Nikkei. Nikkei is very sensitive to this situation. It's down 8%. You know, the FTSE and the German and the DAX, they're down 7 and 9%. The US stock market is down, 4%. Now, this is, of course, not taking into account today's action, which would send all of these lower. But the point that I'm trying to make here is that the US dollar, et cetera, is generally better off than peers because of the energy independence that the US has. Whereas if you're a nation that gets your oil like Japan or India, China, these places do get a lot of their energy oil supply from the Middle East. And China is still being let through in the Strait of Hormuz. I know we've talked about that a couple of times, but in the Strait of Hormuz situation, Iran is still letting Chinese, oil ships through the strait. So, yeah. We'll talk about gold. Take a look at this, see what's going on here. Let's see what we've got. Michael's freaking out in the chat. So anyways, I do want to say that long term, I do think that there is some good viable dips out there in the stock market. I've been talking about it a lot on my secondary YouTube channel, Trader Nick Stocks, if you're interested in that. Gold is another place that I think long term, I think you're getting some decent value in gold. Now that doesn't mean I think it's going to go up today and tomorrow and it's going to be an easy, this is the bottom. Gold may not be bottomed out yet. However, I'm kind of more in the camp of thinking long term that this is a decent buy the dip opportunity, in my personal opinion, not financial advice. I think, as gold continues to move lower, that there's an opportunity to pick up gold somewhere around the 4,000s to 4,200 range. And longer term, I think it's a decent dip buying opportunity. Short term, still bearish. Short term, this is a bearish market, right? You look at gold. Gold hates this situation. And you might be saying, well, how? It's a war. Why is gold going down? And we've talked about this a lot, but I'll keep explaining it because I think, there's always people in the chat who are confused by this. Simply put, gold has pumped up in the last few years on cooling and inflation, central bank buying, and interest rates around the world coming down, aka more fiat currency getting printed, right? Gold has benefited from that environment. Gold has also benefited from, by proxy, low oil prices because they've helped with the inflation story. Oil prices blowing out to the upside has sent the dollar higher and gold lower because interest rate cuts have been getting slashed in terms of their probabilities of taking place. So it's not a tailwind. This situation is not great for gold. Gold does go up on geopolitical uncertainty, but it is even more sensitive and being made evidently clear by that right now that interest rates and central bank policy are far more important even than the geopolitical hedge stuff. Right now you are seeing gold take an absolute beating. I mean, if you're somebody who, a couple weeks ago was feeling FOMO on this thing, gold's down 20%, 21% from those highs real quick. And we've talked about this in the past. I mean, this is what happens in gold melt-ups. People they start believing that something melting up like this cannot go down, that it's going to be a new paradigm and it's never going to change. And look at this. Here is, going back to the 80s, gold ultimately moved down by 67% from the highs, right? Got absolutely crushed. So you have to understand nothing is invincible in markets, and you have to trade the day. You can't trade yesterday, right? So again, precious metals right now. Oh, and by the way, the actually drawdown was worse than that. The drawdown from the highs in the 1980s was 70.5%. And that, by the way, took 7,216 days or so to bottom out from the highs. So there is no easy money. If you think gold is an easy buy the dip here and that you're certainly going to be making money, I'm telling you, you could be. I'm not disagreeing with you. I think long term there's a good opportunity to buy gold. But that doesn't mean I know that for sure that it's going to work out, because gold could do this over the next few years. We could be talking about 2029 before we see new highs. It's possible. If you start thinking, no, that's not possible, the markets will humble you. It can always happen. It can always happen, right? You have to stay open-minded. That's why you also should not put all your eggs in one basket. If your whole trading career is based on gold must be going up every day for me to be a good trader, that's a dangerous thing to assume. It just doesn't go up every day. It has in the recent few years, but that's not a fair assumption for the next few years, right? You know, go back over here and you can see this would have been a really tough environment to try and be betting gold's going to go up all the time. So anyways, I do think you have to put in a little bit more work than that. You can't just assume what was yesterday, the way markets worked, that they're going to be tomorrow. I think that also extends to tech stocks. Tech stocks have been easy money in a low interest rate, cooling inflation environment. I don't know that they're as easy of a trade going forward. I still like tech stocks for the long term, but I think you've got a challenging dynamic here. If inflation is back on the rise, you could really get yourself in some pain trying to bet on tech stocks only, right? Don't say that, Nick. Gold to 10K. Look, I love precious metals, but I also acknowledge that even if I love something, doesn't mean it has to go up. Like, you have to, if you're somebody who is like really, really bullish on gold, I like gold for the long term too, but it would be ignorant to say it's impossible for gold to go down and see 3,000 again. It could happen, okay? And it could take you years to get back to the highs. I say that not to make you feel uneasy. I know that when you hear your favorite, person on the internet say, like, gold could fall down to 3,000, that doesn't feel good, because you're like, well, that would send me into a world of hurt for the next few years. If you're not thinking about it, I'm not trying to make you uncomfortable. I'm trying to make you think about it so that if it happens, it doesn't destroy you. You have to be willing, as my friend here in the chat says, you have to be willing to change your opinion. You got to move with the times, right? We're trend traders over here. We follow macro and we follow what's working in today's world. We don't, that otherwise I'd probably just be a buy and hold type of person. And I'm not. I'm a trader, right? I'm active. I follow markets. I follow trends. But shifting your bias, if you're someone who's permanently anything, get that out of your head. It's a dangerous way of looking at markets, because then when reality is telling you otherwise, you will refuse to address reality. If you think gold has to go up and it keeps going down, or you think, the Nasdaq or the dollar or the Hang Seng or the Japanese, like whatever, if you have some bias that you're like, it has to do this, but it's not doing that, and it's telling you actively that you are wrong and you refuse to acknowledge it, that can get you into a world of hurt in trading. Anyways, I do also want to take a look at our top setups for the day, see if we have anything here of interest. I've been doing some cash secured puts on some stuff here recently. I've got a video, by the way. I've had a lot of people requesting videos on how to do cash secured puts on smaller trading accounts. For those of you getting into options, I do have a video coming out on that. I recorded it last night. I'm pumped to get that out to you guys on the secondary YouTube channel, Trader Nick Stocks. So US dollar still bullish. Reading some of the A1 Discord chat, traders seem way too emotional about Trump. He's just a dude, man. He's just the president, at the end of the day. I agree with your sentiment in the sense that I think people bet their feelings when it comes to markets way more than they are willing to admit. I'll never forget the rest of my life, guys. Never forget the rest of my life that in the depths of the April lows last year, the lowest point in this move, I had some guy commenting every single day, like religiously, every single day. He would comment, don't buy stocks until 2028. Don't buy stocks till 2028. And I thought about it. I was like, why are you so obsessed with this 2028? And then I said, got it. You hate Trump. And so because that guy hated Trump, because he was like, Trump's going to ruin the world, and he was telling everybody in the comment section, don't buy stocks till 2028. And he was mentioning that he was heavily short the stock market and that, it was easy money. He's going to ruin the stock. Like, he was so emotionally tied. And I don't care what your thoughts are on Donald Trump. You might really dislike him. That's totally fine. You might really like him. You might really dislike him. Whatever. Put that to the side for a second. I think we can, like, most logical traders can agree that is a mistake. Even if you dislike Trump, that's a very flawed, you're overvaluing the dude, right? Yes, Trump has a lot of power in terms of making market moves, but in the long term, the market moves. The long term, the market doesn't care just about the president. The market cares about business trends and economic data and geopolitical, kind of conflicts in other parts of the world and innovation in the form of AI, right? If you're simply stuck on, I don't like Trump, so the market must go down, I'll never forget that for the rest of my life. It taught me firsthand, seeing that comment every single day gave me a front seat view of what emotional, political based trading looks like. That dude got destroyed. He was, every day bragging about how he was short, had huge leverage bets on the short side. Don't buy stocks till 2028. I'm short till 2028. If that dude is still watching markets, he got totally wiped out, right? There's no way you survive short with leverage from the April lows, right? And I'm pointing that out because I'm like, don't be that guy. Even if you don't like Trump, that's perfectly fine. If you keep your political views out of your trading account the best you possibly can, it's perfect. I'm biased on politics. I'm not the politics police. I'm just saying keep it out of your trading because it will ruin you. Because again, people will just go the full way with that. They're like, oh, I really don't like XYZ political candidate, so I'm going to short this. And when it rips up in their face, they just double down and lose everything. So, and that will make you really hate that person. And you'll blame them, even though it's not really their fault. It's kind of your own fault. Anyways, rumors say he's still short. Maybe so, man. Maybe he'll get the last laugh. I don't know. I don't know, though. I mean, the stock market from those lows went up 59%, 60%. And he was mentioning being short with leverage out till 2028. So who knows? Maybe by 2028, maybe he'll be right. I have no idea. I'm not necessarily, obviously his call was very, very poorly timed, but who knows? Stock market opens up here in 30 minutes to go, guys. I do also want to mention, hey, if you're not trying out the EdgeFinder right now, you're missing out. EdgeFinder is completely free to use right now, by the way. And if you're not trying it out, here's how you can sign up. It's free until the end of this week. If you scan, actually, I think when is it? When is it free to? It's free until Tuesday. You guys still got some time. If you're interested in trying out the EdgeFinder is free access to everyone. No credit card required. You just put in your email and we send you a link to the tool to use for yourself. If you've been wanting to try it out, there is your chance to do so. No strings attached. Click the link that's just been dropped in the live stream chat or scan the QR code that's below my camera, and that will take you to the form. Simply fill that out and it will email you a copy to start playing with EdgeFinder. Keep politics out of trading, but do acknowledge the fact that Republicans are more dovish than Democrats, statistically speaking. I think right now, yes, but that can also change too, depending on who's in the White House. Suddenly you could see a bunch of, if there was a Democrat president, maybe the Democrats start becoming the doves and the Republicans start becoming the hawks, right? It can shift. Till Tuesday, you're spoiling us too much. Enjoy it, man. Enjoy, try it out, see if it's right for you. I want to give people a chance to really explore all the different features within the software and to mix and match with it. I do want to take a quick look at sentiment, and then we're going to throw over the stream here to my friend Miko Audu, taking over and taking a look at some technical setups. That should be a good session with him. So we do have, in terms of the investor sentiment survey, we have new data here. So this is a really simple tool. It just looks at historically and current outlook in terms of stock market bias according to the investor community, right? So this is going to be kind of your everyday investors and what their feeling is on the market. And so the latest survey, which dropped last night, showed bullishness is at just 32.1%, while 49.8% of respondents said that they feel bearish on the stock market looking out in the next 6 months. That's pretty pessimistic. And when we scroll down, we can also see this visualized here. You can see that bearish sentiment has been on the rise, while bullish sentiment has continued to overall remain falling. So I look at this and I say, okay, well, that tells me that if you do get some good news, this market is very positioned for downside, right? People are very nervous out there. And I think that they have a reason to be nervous. I am also kind of cautious on the stock market. I am definitely in the majority thinking here. However, I do also acknowledge that if you get something that truly shifts the nature of this market, if you get some kind of mutual agreed negotiations and a ceasefire in the meantime will take place. If you get that from both sides, Iran and the U.S., this market could have an explosive move to the upside. So a couple levels to watch here on specifically like the Nasdaq. Look for the highs of this week to get taken out. If that were to take place with some conviction, that would be big. But the other, of course, spot you have to watch is a break through these lows. It does look like we are headed back towards those lows, at least for now. S&P 500, same story. You've got these intra-week highs that if you could break through, that would start to look really constructive for the bulls. But on the downside here, a push through those lows would be more bearish. I still kind of remain neutral in terms of actual positioning for S&P 500. Long term, I think there's some viable dips out there, but short term, the tape still seems very bearish. Look at that 4-hour chart, and that's pretty much enough for me to say, okay, yeah, that's a seller's market for now. Dollar index continues to remain mostly bid here. Let's see if we get a breakout through that 100 level once more. Oil prices remain overall in an upward trend. We'll see where that goes. Bitcoin struggling here, still looks pretty challenged. And then if we're talking anything else, let's see anything else that stands out today. Yields are higher once more. So should be a continued bullish factor on dollar until something changes there. Precious metals, gold, silver, last thing here. I will probably sell a fresh cash secured put on gold longer term. I think there's some decent value to start buying the dip on it personally, not financial advice. So I'm going to probably look to sell another cash secured put on gold. And that means if it keeps going lower, I'll essentially get assigned and buy some shares of it. Okay, guys, up next, you have Miko Audu taking over the stream. He's going to be taking a look at some technical trade setups today that might be useful for you to stick around and watch. If you like a lot of charts and a lot of flipping through and answering questions, then Miko's sessions are a gem for you. Stay tuned, coming in just after this quick break.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
All right, guys, welcome back to another stream. Hope you're all doing well. As always, guys, bunch of markets to get through. My main focus today is Euro dollar and pound USD, so I'll spend some time there. But of course, if you guys are looking at any other markets, any other pairs, any other different time frames, feel free to let me know, stick in the chat. More than happy to take a look at pretty much any market and let you know some of my thoughts. But starting with Euro USD, I'm pretty bearish. Coming into the week, we had a bit of a awkward week last week because we've had a lot of bearish momentum over the past few weeks, month or so, and the bias has been pretty bearish. Looking for shorts on euro dollar, pretty bullish on USD, same as pound USD as well. And that's still very much the bias, except last week we had a bit of a pullback. So it looked as if we're slightly exhausted and potentially we're a bit more kind of 50-50. But the key element this week is that we did maintain prior week's highs. We came back, retested it, failed to break through, and looks as if price is now breaking to the downside. So that's my confirmation that momentum is now favoring bears. Bears are becoming a lot more stronger, and potentially we could see Thursday, Friday seeing some follow through to end the week. Now I'm looking at least 50% of prior week's price action, so roughly around 1.15 100, which we're almost there. But if we do drop to some intraday time frames, there could be some nice pullbacks, especially in the 15-minute chart, to trade that next leg. We've had a really nice push lower as we open up for London. I'm looking to see if we can get a pullback and a continuation of that. So I'm looking for that intraday opportunity. I was looking at some shorts higher up within the week, and I did take some on pound USD, but it was break even. Didn't really see much follow through the first half of the week. We kind of just got stuck at this area. But now that we're seeing that movement, now that tells me, okay, the bears have actually held their ground. Buyers are kind of not being successful, and I do expect to see some more follow through. Longer term, I'm still looking for a push to this low, but let's take it step by step. Let's see what happens at this area first. We could consolidate, bounce, maybe even turn around. But if we can see momentum really pick up, there is opportunity a lot lower. And pretty much the same analysis with pound USD. Again, last week's price action, a little bit messy. But overall, we still do have this bearish sentiment, this bearish trend at play. We came back into prior week's highs, rejected that very well. Most of this week was just consolidation, but now looks like we're finally committing to the downside. I do think Euro's seeing a little bit more momentum and looks a little bit cleaner. And if I do whip out the fib and map the 50 out, you can see prices already tested the 50 of last week's prior price action. So I would rather short Euro because we still got a bit of distance to travel before we do get to the midpoint. Whereas pound USD's already achieved that. Potentially it might start to be a bit more choppy now. So I like Euro intraday shorts. Oh, didn't mean to do that. I like Euro intraday shorts. And overall, I'm still pretty bullish on the DXY. It's slightly awkward on the DXY because we are in a larger range. So for us to really get some follow through, we do need to break this 100.25 level, which is effectively the high of the range. Because equally, price could test that level, respect it, and roll back over. So I'm bullish on the DXY for us to come back and test it again. Then it's kind of, we'll wait and see how price reacts. Potentially we reject very well and things turn bearish potentially, or maybe we see a big breakout, and of course I'm looking for continuations after that happens. So dollar for me, bullish overall, but let's see what we do at resistance, because that will make or break the bias. And of course, if that stays true, well, euro and pound naturally going to be looking pretty bearish. Again, any real questions, put it in the chat. But okay, yeah, we'll take a look at dollar yen as well. What's up, Michael? Yes, absolutely. We can take a look at gold as well. I'll go through dollar yen first. So yeah, USD JPY is an interesting one because we got USD bullishness there, but we've also got yen weakness, and yen weakness has just been persisting. Like it's not going out of fashion. It's just yen is just weak, and pretty much everything against the yen is stronger. And especially when you got a currency like the USD, which is currently quite strong as well, you got a really nice recipe there. So if I'm doing anything with dollar yen, it would be looking to buy. Yes, we're kind of approaching resistance. I'll be a bit cautious at the moment, but I'm not interested in selling whatsoever. I want to stay with that kind of dominant tailwind. I don't want to be going against that. So with dollar yen, I'll only be looking for buys, and there are still higher targets which we can look to get. So we've got the highs from 2024, I believe, 161. That looks like where price is slowly working its way towards. So I would suggest two things. If we can get a slightly deeper pullback, let's say price does find resistance here, then I would like the opportunity to pick some longs, basically at the low of this range. The past couple of weeks, we haven't really gone anywhere. We found support a couple of times. If we can find some longs there, that'll be the best place in my opinion, to get along, provided we see some healthy rejection. The next best opportunity would be if we can see some clear distance between price and this level. See a healthy breakout, implies momentum is still alive and well, and then simply just looking for pullbacks. Nothing complicated, just trading what the market is rewarding right now, which is a persistent bullish trend. So we're either looking for breakout plays, looking for break and retest, or deep pullbacks into healthy support and buying the dips there. Until we start to actually break bullish structure, so let's say price was to break through this, I would still be bullish overall, but I would pause the bullish bias, at least on the intraday timeframes, because a break of that support doesn't suddenly change the whole regime of what's happening with the yen. A break of that support might just imply we might be having a bigger pullback, most likely. So yeah, dollar yen, just looking for buys. Again, we're testing highs now, so a breakout could be on the horizon pretty soon. So if that happens, great. Let's see how price maneuvers on a retest. If things look good, that's a great place for a buy. And if we do fail at the highs, there are some opportunities a lot lower. In terms of gold's been interesting, of course, a bit of a bloodbath last week. We had a really aggressive move. You can see by last week's candle there. Absolutely crazy price action. But it's interesting this week, because this week it was kind of a situation where, okay, we had a bloodbath last week. Is this week going to persist with that momentum, or is this week going to do something else? So far, it's done something else, because effectively we had this prior low and price is basically just stopped on a dime almost. We had Monday's candle open up, a lot of bearish momentum, but we pulled all the way back up in respect to that support level. So I'm actually looking for some short-term buys for gold, provided that this support level holds. And I'm not looking for anything crazy for gold, because the bears are quite dominant right now. I would only be looking for a pullback of this bearish move to the midpoint, and that's about it. Anything more is a bonus. So if I whack the fib from the high to the low, you can see we've got the 50% running there around 47.50, lines up quite well with that psychological level. So I would be looking for something like this, provided that support level holds. If it doesn't hold, then I wouldn't be looking for that move anymore, because the thought process is, okay, we've had a big expansive move lower. It looks as if we're exhausted. Support is holding. Now I'm expecting buys to push us at least for a retracement. Maybe we still sell off, who knows, or maybe we recover completely. But the idea is that we're exhausted, now we're likely to go through retracement. So if I'm still seeing momentum persist lower, well, we're not exhausted, sellers are still active. Maybe we could even see some new lows at that point. So it's provided that we hold support and provided that we're still showing exhaustion to the downside. Again, when you're buying markets which have had just such a exaggerated drop, you're basically calling that, okay, the move's exhausted, I'm expecting retracement. So if you're seeing any signs that momentum's still picking up, it's probably a sign to maybe exit the trade or reduce risk. So yeah, if we can hold this area, I like the buys. You can see a bit of a brief consolidation here, and it did actually spit out some nice momentum there on Tuesday, Wednesday there. So basically, I'm looking at this as a retest. I think this is a really nice place for a buy, especially if you can give yourself a bit of room and a stop loss. I wouldn't be too tight with this one. And then at the very least, a pushback to prior highs. 50% the midpoint is a logical target. But I would say it's better to play it a bit more cautious, because again, we're just going against so much momentum now. But yeah, if that support holds, I do like the buys there for gold, and same thing for silver as well. We had similar price action between the two. Really aggressive move last week, not as aggressive as gold, but pretty aggressive as well. But again, you can see price support here held. So I'm looking at a midpoint of that move, which will take us roughly just below 80. So into support here, I'm looking to see if we can get that pullback. And again, it might just be a pullback for more downside. Maybe it's a reversal. We'll find out when we get there. But again, for silver, I like the buys as well. So as silver pulls back into structure, effectively, I want to see silver hold on to this. This is where I'm looking for silver to turn around. If I'm not seeing buyers step in there, it's probably a sign to be a bit more cautious. But yes, I am looking for some upside for gold. Short term though. Okay, we can take a look at the S&P as well. wants to buy above 160, either you have a big ball or you're insane. To be honest, it's all about just playing what the market is rewarding to a degree. So for example, if the market is really bearish and falling, and then I step into a buy, basically I'm saying, okay, I'm expecting this support to hold for whatever reason, and buyers to step in and sellers to back away. If I'm not proven correct initially on that trade, it's a trade which I will pull very, very quickly. So it's not a situation where I buy, put a stop loss and just sit back. It's a trade which I will actively manage because I'm going against the current dominant situation, which of course is a lot of selling pressure. So if I'm going against a big drop like this, like with gold, like with silver, it's a trade which you want to get in and you want to see an initial reaction in your favor pretty quickly, and a strong one too. If you're not seeing that, if you get into the trade and price is just kind of dancing around your entry or slightly picking up against you, that's a sign to get out quickly. So you can keep your risk fairly small. And of course, if it does succeed, there is a lot of distance to the upside because you're essentially trading the pullback of that move. It's more of an aggressive trade, but the logic is that you're there just to see if the market is going to respond. If the market doesn't respond, you cut the trade. If you're just constantly trying to buy dips of very exaggerated moves, then of course you're going to be your back's against the wall. But if you can time it well, there's a lot of opportunity there because if the market does pull back that move, there's a long way to pull back essentially, especially if you get to the midpoint. But of course, it's a definitely more aggressive approach. We can take a look at the S&P. So the S&P has been pretty bearish as well, still falling too. My main focus with the S&P was basically what is price going to do here at 6,500, and so far it's respecting that area. And for me, if price can hold that level, I'm looking at a turnaround, just purely based on the significance of this level. If it does break through, then there is room for us to actually keep falling. I'm looking at this prior high since we had like our last big correction, which is around 6K or 6,100. There is room for us to fall into that as well. But I would say this is already a very significant support level. If we can hold this, there is I shouldn't say the word, there's a good chance that we could actually have a meaningful correction. I would say even at least the midpoint of this range, because let's say we've got equal highs here, roughly equal lows, roughly around here is our midpoint. So that would be a healthy correction, which would take us back to 67.50, which is a pretty good move, especially if you can drop to a lower time frame to try and execute a trade on that. But essentially, the trade idea is, can we hold support here? If we hold support here, you're looking for buys here with a sizable stop loss below the low there. You don't want to be too tight here. You're effectively trading mean reversion. If price is going to fail at these extremes, you're expecting price to now push in the opposite direction. If we're seeing failure below, then of course you want to be out that trade. And with a trade like this, again, you're going against the grain. The whole point of mean reversion is that price has had to move away from a mean that's likely to come back to it based on prior conditions. And as long as we can hold support, you got yourself a good chance there with a favorable risk to reward. So I like the S&P to the upside. I probably would execute this on like a 4-hour chart. I wouldn't drop too intraday. If I'm looking for anything intraday, I want to see evidence of a trend form first. Breaking through highs, higher lows. Then yes, I wouldn't mind some pullback opportunities for a buy. But that's a different situation. We don't have that at the moment. The market's still falling, but still respecting support. So there's kind of two ways to go about it. You get the more aggressive trade at the low, basically essentially saying, I'm expecting that support level to hold. You give yourself some nice room in the stop loss. Then of course, if it doesn't hold, you stop out, you walk away. Or of course, if it does play out, you manage accordingly. Or you can wait for momentum to pick up. If you're more of a trend trader looking for pullback opportunities, then of course you want to wait for price to start breaking highs again. I wouldn't be looking to sell though. That wouldn't really be my plan based on where we're positioned. Yes, the market's been falling, lovely lower lows and lower highs, but I don't want to be selling the market going into such a major low like this. Of course, we could break it, but I wouldn't want to try and find that out with a trade. So yeah, that's essentially how I'm looking at the S&P. I can go through dollar CAD. Okay, I'm seeing some dollar CAD requests. If there's any particular time frames you guys want me to take a look at as well, feel free to stick it in the chat. More than happy to take a look. But yeah, USD CAD looking pretty bullish over the past few days, especially this week. We've really picked up momentum. pretty much since the open actually. Yeah, Monday we've just been flying. So yeah, it looks like price is now coming back to this area. This is where we had our last bearish leg. I've whacked on a fib from the high to the low. Since we've lost the midpoint, it looks like price is doing a full reversal of that. So I'm pretty bullish on dollar CAD to 1.39, and then we'll see how price reacts, and then I'll either probably flip the bias or become neutral. But 1.39 looks like a logical place for us to push towards. So again, it depends on your style here, because clearly there's momentum in the market, and looking for some momentum plays does make sense here. I would suggest I'll probably keep it even fairly simple. Just probably drop really intraday actually, and try and trade for the sessions actually back into prior support within London, and a push back to high. I'll keep it fairly simple like that. The reason why I wouldn't look for anything more is because we're kind of overextended. So especially when I'm trading Forex, I don't want to be looking to buy overextended moves. If the market's overextended, then yeah, I can try and look for a short-term buy within that or short-term sell within that. But I wouldn't look for now a correction here for a buy, because I would expect a bigger correction now. This looks like a more meaningful area where if we could get a pullback here, then yeah, I don't mind, because after an overextended move, we've now had a retracement. Price is now back in equilibrium. Now we've got a healthy chance for a continuation, especially trading Forex markets, which again, naturally quite choppy, naturally revert quite a lot of the time. So if I'm looking for longs and dollar CAD, see we get a much bigger pullback into 1.374. We've got prior consolidation here. This is kind of where we saw the breakout from. So a revisit would make a lot of sense. If you're looking for some trades for the day and just kind of taking advantage of what current conditions are, I would scale right down to a 15. Yeah, I wouldn't be looking for anything bigger than that. But yeah, dollar CAD, I'm pretty bullish. I do see us getting to this kind of area. This is where all that that selling pressure kicked in. I would say there's a good chance we come back and revisit and test that area. And then we'll see what happens. Maybe we reject, or maybe we even break through. But I'm still pretty bullish on USD. So I like the idea to the upside. It lines up in terms of the correlated markets as well. Buying dollar at the moment seems to make the most sense. So I like USD CAD there as well. Of course, yeah. Intervention is risky, even with a stop loss there. Yeah, very true. Yeah, that's one of the risks of trade. I mean, especially with the yen. Yen kind of is a different situation compared to some other currencies. But yeah, I mean, again, if you look at how often interventions are, they're not that often where you would panic too much. Of course, the chances of an intervention coming in are increasingly higher. So you factor that in. You can just say maybe I'll reduce risk with my positions. It's difficult because you could miss out on a really good trade out of the fear of that intervention come in, then it doesn't come in for a while longer potentially. So there's no right or wrong way to go about it. It's just making sure your risk is managed. You know, you're not going full blow, no stop loss sort of situation. As long as your risk is managed, yes, you could get slipped if the intervention's very thick and fast. You know, that's just one of the prices of trading. So yeah, I would say if that's something on your mind which you don't want to be trading, of course, just don't trade it or reduce risk. I think that's the best way about it, because again, it's hard to necessarily predict when it's going to happen. But yeah, we can go through Aussie dollar as well, another USD pair. So Aussie dollar, I'm liking this one to the downside. Again, pretty much all the crosses I'm looking for opportunities that favor USD longs. Aussie dollar, I'm looking for downside, but not really a market I'm focusing on too much right now. As I said, euro and pounds where my focus is. But again, in terms of correlation, I'm expecting this one to push down. We've had a lovely bullish move, but it looks like we have hit somewhat of a top of that. We look fairly exhausted here, and we've come back to some meaningful resistance as well. The next logical area of support based on price action would take us to around 0.675. If we can see a solid break of that support, there is a lot of room to the downside here. So in terms of opportunity, Aussie dollar does make a lot of sense in my eyes, because again, especially when you're trading FX, because everything is so kind of on top of each other, overlapping. Sometimes the best opportunities is just the trade that has the most room to run into. And this has room, because you can see we didn't really find much support here. So not that the market, of course, can't find new support, but if we're going to come back to a prior area, there's a pretty nice distance to travel there. So I would say Aussie dollar shorts make sense once we can see a full-blown breakout. It looks like we're seeing evidence of that happening, but I wouldn't judge that on a 4-hour candle. I'll probably would wait for a daily, preferably even a weekly. The higher, the better, normally with breakouts. But if we can wait for at least a daily to close and really cement itself below, and then as long as the next candle doesn't close back above, that for me would be a valid breakout. And then the plan is just looking to ride that momentum for as long as it persists. And you've got support around 0.675 to target. So yeah, pretty bearish on Aussie as well. Hopefully we can see that breakout. If we do close back above, then of course there is no shorting opportunity. But I'm not really interested in buying Aussie. There might be a mean reversion short-term trade here if we fail the breakout. There might be something like that, but I'm quite bullish on USD at the moment. Yes, I can go through pound quickly for you, no problem. I think I briefly scraped over pound, but yeah. So yeah, I said with pound USD, I like the shorts. I'm still pretty bearish on pound. In fact, if I go to the weekly chart, I can show you exactly what I'm looking at. Basically, you've got the range here. There's the high roughly. Here's the low roughly. I'm basically looking for the market to continue falling back into the low. We're kind of 80% of the way there, but I'm looking for that last 20% to get us back into support. So I am pretty bearish bias, and I'm looking for us to roll over. Effectively, as long as we maintain this resistance here, I'm bearish. If we break above, then of course I would become neutral quite quickly. I wouldn't even change to bullish straight away. I'll become neutral quite quickly. But as long as we can maintain that, I'm looking for momentum to eventually pick up and roll over. Just in terms of actually trading pound USD, I don't think we're in the best place for it. We're testing the prior midpoint of last week's price action, which notoriously is just an area of fluctuation, an area of support and resistance. It's not an area to be selling into, especially if we have a bearish bias. We might see a reaction like this actually, but I wouldn't want to be selling here. If I'm looking to sell pound USD, I want us to push roughly back to the high of this week and then maybe look for a double top, something like that. That is kind of where I want to position myself short, which is why I like Euro slightly more, because Euro USD, if I can spell it correctly, it's not quite at the midpoint yet. We still got a little bit of the way to go. So I'm looking for some intraday trades to get us there, and then we'll see what happens after. But in terms of direction, pound USD, bearish bias, market structure is pointing that way. So as long as that stays true, that's the direction I'm looking to trade in. And in terms of an area which shorts make sense, it would be anything around here. And then we're looking at something like this. So yeah, pretty bearish on pound. Just not currently trading at a zone which I would be happy shorting. And you can see we're looking a little bit tired as well. You can see by the size of candles as well. The market looks a bit exhausted. Not a good sign to be shorting anything either. So yeah, pound USD, higher time frames look good. Just let's see if we can get a bit of a pullback. And Euro, I'm looking for effectively the same thing. And if you have a quick look at the DXY, yeah, I like the DXY because, again, we've got that clear trend. It looks as if the DXY has found support here, respecting last week's low, and now momentum slightly picked up. Again, might not be the best place to be buying the DXY as we come back to resistance, but we might see a bit of a pullback and then the continuation. I think something like that can translate to pound as well. Bit of a reaction, then we get the continuation. That would set up a nice trade. So, okay, I'll finish up on EuroCAD quickly because I'm running out of time here, but I can quickly go over EuroCAD, not a market which I've been looking a lot at recently. So a lot of the analysis here would be fresh off the dome, it's not off the dome. Anywho, okay, so yeah, we had that massive drop a few weeks ago. Looks like we retraced already a lot of it. An effective area to keep in mind, of course, would be that prior consolidation before we had the drop. That's natural. That's naturally going to be an area of significance where the price breaks it and trades above it, or respects it and pushes back down, it would be an area to really have a good judge on where price can go afterwards. At the moment, looking at this move here, again, drawing the fib from the start of it to the bottom, we've climbed back above the midpoint. So that for me is already a sign that maybe we're not going to get a clean pullback. So I would be looking for something like this now, and then a continuation higher. This area looks more meaningful by the day, actually. So if I was trading EuroCAD, I would be looking for a pullback. We've just gone and created some new highs for the week there, so I would look for a pullback. This area would be nice, coming back into the midpoint of that bearish move, and we've got like a nice area of demand there, so a nice kind of layer of confluences. And if I can get a stop loss below there, that would be very nice too. Yeah, buying up here is just a little bit too high. We've already had that extension. I would want a pullback first. So yeah, EuroCAD buys look good, especially if we can get back to the midpoint, and we've got that massive zone, which is probably going to be a bit of a drawn price as well. But anyway, guys, we have come to the end of my segment. I do appreciate everyone from tuning in. If you have enjoyed it, drop a like on the stream. And of course, if you want to check out my channel, I'm pretty sure the team have dropped a link to my channel, so you can go see some of my content as well. But yeah, I really appreciate you guys having me on here. Have a great day, guys. Take care, and I'll see you all in the next one.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello. Happy Thursday, everyone. Hope you're all well. Hope you're all having a successful week in the markets. So let's take a look at some potential trade ideas. We'll go through some analysis, and of course, we'll go through some fundamentals. So there's not really a huge change on the EdgeFinder since we spoke yesterday. However, there is absolutely some great readings that we can look into. There's definitely some fantastic trade ideas, at least on the horizon. So we can clearly see New Zealand US dollar is very bearish. We're seeing US dollar yen getting a very bullish reading. We see US dollar CAD also getting a bullish reading, as well as the US dollar individually. So there's a clear, what do you want to call it, like a clear theme at the moment of the EdgeFinder suggesting US dollar longs. What else do we have? We've still got the sterling long theme as well. So we can see pound New Zealand, pound Swiss, pound CAD, and the pound Aussie. So let's take a quick look at pound Aussie, because I'm still in my long positions here, or still in my long position. So this is more of a DCA / mean reversion approach. This isn't my typical sort of swing trade with, you know, one entry, stop loss, take profit on a fib and a pullback. It's a different approach. So what I'm looking to do on this one is actually, let me just change my indicators for a second there. So what I'm looking to do here is catch a mean reversion on higher time frames. So you can see I'm going in very, very small with 0.01, really not any significant size whatsoever. But what I'm planning to do is add into this position if we can get further drawdown. And the thought process I've got here is, first of all, what we've got in the EdgeFinder is, let's just have a look at the scorecard on the pound Aussie. So we were actually quite short for a significant period of time. I think all of us were at least looking at pound Aussie maybe 2 to 3 weeks ago. It was kind of the main topic was either Euro Aussie or pound Aussie. And we can see that on the EdgeFinder. Very bearish reading for quite a significant period of time. It was basically the whole of 2026. This market, or this pair, sorry, has had a bearish reading. Now, we've flipped to bullish, and we flipped very quickly from very negative into somewhat positive with a score of +6, obviously. So technicals are getting a bullish reading, sentiment's bullish, inflation's bullish, the jobs market is bullish, and economic growth is the only bearish factor. So we've got the majority of fundamentals on a positive side. Technicals positive, retail, as always, on the wrong side at the wrong time. They already missed the shorts, and now they're obviously stuck in shorts. So with all of that said, we then go to technicals and we see the 200 moving average here has obviously been broken temporarily, multiple wicks to the downside, and now we're seeing a very strong weekly candle, well, looking like it wants to close back above this 200 moving average and continue higher. So then we can go down to the daily. And I've got the Bollinger Band here, so you can sort of visualize, or I can visualize it to you in terms of what I'm talking about when I'm speaking about mean reversions. So during the bearish period on pound New Zealand, we obviously had this move here, which again, it's a daily time frame, so it is quite a large move. It's a large price difference. So I'm looking to see if we can now come back up into sort of the pre-drop price, if that makes sense. So that's kind of the thought process I'm going with on pound Aussie. We'll see how it works out. Again, position sizing is absolutely minuscule, so it doesn't matter how it works out really. It's more just a bit of speculation. If we can get that mean reversion, fantastic. If not, fine. I'll take maybe like a $50, $100 loss. Anyway, let me check the chat. Sluggy, good to see you, my friend. Hope you're well. I think AUD would depreciate till next CPI data release, which is expected to be hot. Well, that's the other thing, is inflation has kind of a limit. There's like a point in inflation where, you know, inflation's going up, we can expect rate hikes, fantastic. But then when inflation continues to rise, it starts becoming problematic. And then what we've also got is the fact that during this drop we had, so when the Australian dollar was the most dominant currency, and it was just like the only thing really you had to do was buy the Australian dollar. It was very, very simple. But during that period, one of the biggest drivers was the fact that the RBA, which is the central bank for Australia, was the most hawkish central bank. That's just not the case anymore. So we've got the fact that the Australian economy isn't as strong as we're seeing on the EdgeFinder, or as strong as it was. Then we've got other central banks that are taking a more hawkish position, maybe even a neutral position. Obviously, with the Bank of England, they're taking a more hawkish stance. So we're starting to see a little bit of a repricing in the markets, if you will, as these central banks are making changes, as data is changing, and of course, as the Middle East is developing. So that's kind of the situation right now. Pound CAD, yeah, we can have a look at Pound CAD for sure. Hello, noob. Hello, Ronnie. I'm never going to try and say that. Hello, Ronnie. Theme has been fade any pops. How do you mean, Sluggy? In what market? What are your thoughts on Aussie New Zealand? Yeah, we'll move on to Aussie New Zealand after Pound CAD then. So let's get rid of these Bollinger Bands. We don't need those anymore. So with Pound CAD, we've got some nuance with the geopolitical aspect, but let's take a look at the EdgeFinder first and see what we're getting, because I'm not sure if Pound CAD's actually getting a reading at all in either direction. It is. So we do have Pound CAD reading bullish. So that's quite a nice sign. Now, when it comes to the geopolitical, I can't talk, my apologies. Geopolitical aspect, it's really dependent on what happens, obviously. So the situation with Pound CAD is fundamentally, yes, it's bullish as we saw in the EdgeFinder, but the downside or the risk to trade in this market right now is further escalations in the Middle East. So if we get news that, for example, the Strait of Hormuz will remain closed for maybe a longer duration than what people thought, or I don't know, something could escalate that could obviously affect the oil market, which would in turn bolster oil even higher, support it even higher, possibly hitting 120, 130, maybe 150, depending on the severity of it. In that case, obviously, Pound CAD is going to take a hit back to the downside. So as long as we don't get that situation where either we get de-escalations or things maybe just stay the same, then yes, we do have possible room for it to continue higher from here. But I think you do need to be aware of the risk of trading the Canadian dollar right now. So Aussie New Zealand, yes, I'm still long. Again, very small position at the moment because my caution is obviously with the Middle East. I'm just a little bit too, maybe not too on edge. That's not the right way of saying that, but I'm just taking it very slow, very steady, very small, because what I don't want to do is start taking, you know, my 1 to 2% standard risk on all my positions. And then something happens that completely changes the risk sentiment or the regime. And then, you know, it could be a very quick, pretty large loss if that was the case. So keeping risk small. Yes, I'm still bullish on Aussie New Zealand, but there is the aspect that we could start seeing a mean reversion come in. So as we've been discussing over the past couple of weeks with Aussie New Zealand, although fundamentally it does remain bullish, the fact that the Australian dollar is losing a little bit of its fundamental steam, if you will, and we are very, very, very overextended, technically speaking, on higher timeframes like the daily and the weekly. So at some point, I'm fully expecting a reversion back inside this range. It could not happen, of course, but that does seem like the most likely situation or the most likely outcome in the, excuse me, let's say the next 3 to 6 months. That might even be too long, but sort of short, medium term, yeah, absolutely. I would expect this market to return back into the range. So short term, I would remain buying dips. Let me pull on these indicators here. So I would remain to buy dips whilst price is still above the H4 200 moving average. If we start breaking below, I would actually start pivoting short and maybe do another DCA approach where I'm layering in very small positions, looking for price to return back into that range. So the EdgeFinder, it's actually dropped off the EdgeFinder. So there you go. That's that point proven. Last time I checked, it was getting a bullish reading, but it's now seemed to have fallen off. So yeah, maybe some sort of mean reversion play is actually the way to go. Very difficult to do that. Obviously, all the time frames actually are very bullish at the moment in terms of the trend. So being a short seller, yeah, probably a little bit more difficult at the moment until you start seeing that trend actually change. I'm so sorry, my friend Noob comes by mistake. Can you please confirm that XAU USD is spare? I've got no idea what you're talking about, but yeah, we can check gold, no problem. But don't worry, I don't take offense very easily. I'm British. So with gold, to be honest, still shorts. So this is the problem I've got with gold is, first of all, I absolutely don't want to sell. I do not want to be in any short positions on metals, flat line, point blank. Short-term scalps on like 1 to 5, maybe 15-minute timeframes, that's different. But talking about swing trades, absolutely not. No way. So what we're seeing on high timeframes is still completely fine. We're seeing a really, really nice bullish sort of formation, really strong rejection here on this weekly off our 50 moving average. Then we go down to the daily time frame. Here, again, really strong rejection off our 200 daily moving average. But the downside is, if we look at the RSI here, it was very oversold, popped back up a little bit, and now we're starting to see a little bit of a continuation down. So this pop here could have been, first of all, just a technical reaction off our 200 daily moving average. It could also just be a sort of small mean reversion type move rather than it being a real sort of buy the dip opportunity. Obviously, I don't know that yet. It's a bit early to say. But then we start looking at the H4, which is obviously in a bearish trend here. So I'm in a situation where long term, so if we go back to the weekly and the daily, I would still like to be a buyer because the technicals are still very healthy. The trend is still healthy. But then we start going down to the H4 and the H1, and it's looking very bearish. So technicals, I'm a little bit mixed. But then if we start looking at the drivers of gold right now, like what's actually moving price is obviously the fundamentals and the geopolitical situation. Excuse me. So with the geopolitical situation, what do we notice here on these short-end yields? Hold on, that's really messy. Let's just do this. So what you should all pretty much notice straight away is the fact that we obviously had normal yield action over here. You know, they're doing their own things, whatever. All at the same time, they spike. And why did they spike? Well, they spiked because of obviously the Middle East situation. Oil spiked, inflation expectations are going higher. Market participants are expecting higher for longer stances for central banks, essentially. So the fact that the yields are spiking, I'm not trying to go too complex or too in depth with this. I don't want to lose you guys for anyone that might be newer to trading. But what I'm trying to say here is that because yields are spiking, and market participants are expecting central banks to either stay on hold or maybe hike, depending on the exact country or the exact central bank. That puts you as a trader and as an investor in a situation where you've got to say, okay, do I actually want to buy gold? I don't know what's going on here with this bar. Hold on, let me just, there we go. So what's the point of buying gold when it's clearly down? Well, first of all, there isn't really any point to buying gold right now, unless you're long-term accumulating. So that puts you with an opportunity cost. So if central banks are either holding or hiking, and we've got currencies actually performing quite well at the moment, the better opportunity is going to the currencies that have got higher yields. So does that make sense? I'm not sure really maybe if I made that a bit too long-winded, but hopefully you get what I'm trying to say there. So to nutshell it, gold is not in a position to really do anything at the moment other than head lower. And we can also confirm that with the DXY, which is the US dollar index. We've obviously had the US dollar being showing strength since the start of the Middle East war, and obviously again supported by yields. So yeah, the dollar, the gold, yeah, there's just not really much there to buy from, to be honest with you. Let me just catch up with the chat quickly. I'm lost as to where I was. Okay, so yeah, to actually answer your question, is it bearish? Yes, it's bearish on lower time frames. H4 lower, gold is bearish. Daily to weekly to monthly, gold is still bullish. So it really depends on what time horizon you've got if you're looking to trade gold. Oh damn, I longed the same spot, just a little tight to stop. What, an Aussie New Zealand? Good luck. It's not looking overly optimistic right now. James, Pan New Zealand going good. I backtest 10 years of data, got positive EV. Didn't we speak about this yesterday, Aizen? But either way, well done. That's really good to see or hear. Do you think Aussie yen is a lost cause for longs? No, but I think there's better opportunities now. So Aussie yen was a great market to be just a buyer of. Again, it was back when sort of the start of 2026. Aussie yen was one of the best markets to be a buyer of, to be honest. However, right now, because the Australian dollar is showing a little bit more weakness in its fundamentals, it's clearly stretched on a technical basis as well. If you're wanting to be a seller of the yen, I think maybe dollar yen, even pound yen could actually be a better opportunity, because obviously we've got the Fed on hold, and we've got a more hawkish a more hawkish Bank of England. I think yes, pound yen, dollar yen, maybe even CAD yen. I'm not overly optimistic about CAD yen either at the moment, but yeah, they're the markets I would prefer to trade if I was looking to be involved with the yen. Yeah, you're right. It's a really perfect analysis. Appreciated. Well, thank you, Ronnie. I appreciate that. Maybe I'm not such a noob after all. Oh, I'm joking, of course. James, Pan New Zealand going good. Yeah, you said that, Aizen. You've said that message about 12 times in the past 2 days, my friend. But yeah, Pound New Zealand, I'm still in. I forgot. Oh, no, I'm sorry. I'm not in Pound New Zealand. I was thinking of Euro dollar, which we'll move on to in a second. So I closed my Pound New Zealand trade, not for a huge amount of profit. I closed, I think it was roughly around this level. So I was buying around here and closed it roughly here. So I didn't get a huge deal out of it, but I wanted to move over really to Euro dollar, which is looking okay so far. So again, same idea, building up positions with very, very small position sizes over a longer period of time to build up to a larger position eventually. But my idea here is looking for a correction of this left side. I've got about 10 minutes left, so I'll try and speed up a bit here. So looking for a correction of this left side. We go down to the H4. We've got a bearish trend. Daily is still bullish. However, if we zoom into the daily a little bit, what we can see is we've broken, actually, let me just try and clean this up. There we go. So we came down to the 200 moving average on the daily time frame. We saw a pop to the upside, showing that buyers were attempting, obviously, to catch a bid from here. Clear failure. Price came back up, retested our 200 daily moving average, and has shown a bit of a rejection. And that's not a huge deal. It's a little bit more of a micro analysis, which I don't tend to do. But it just shows a little bit of the sort of sentiment in the market, if you will. So it looks like the daily is about to change into a bearish trend. H4 is already established, and we have euro dollar reading bearish on the EdgeFinder with -7, along with the fact that, obviously, as we've already spoken about, the US dollar is quite bullish at the moment with the Fed on hold for now. So I think euro dollar is still a fantastic market to be involved with as a short seller. All I'm really looking to do at the moment is just sell on rallies. What's up with dollar yen, dollar CAD? Okay, I'll try and get through these before the end of my segment. James, I'm short on the S&P and on NAS. Very nice, Sluggy. I'll take a look at those in a second. James, where do you get bank reports? I get them in my Discord, not Pan New Zealand. What were we looking at? Oh, dollar yen, that was it. Okay. So I think dollar yen remains a good pair to buy. I mean, fundamentally, it's getting a very bullish reading on the EdgeFinder. The yen is still a funding currency. We've got the Fed on hold. So there is nothing really standing in the way of being a buyer on dollar yen. The only thing is just that intervention risk. So I've been saying, and this is purely my opinion, no one really has evidence or proof or can tell you 100% for certain when or where the MOF will intervene on the yen. But I would expect dollar yen to come back to 161 within that area. Let's just say 162. From there, I would expect it to start heading towards 163, 164, maybe 165. And within this area, we'll see an intervention. Again, no guarantee. I have no idea. This is just my best guess. So if one of those areas if price reaches one of those areas within a low liquidity period, so it could be a US holiday, it could even be overnight when the US desks or US traders are away from the desks. We'll see. I don't know. But that's just my opinion at the moment. Insider paid sources, pretty much, yeah. You don't take a live trade. I don't take live trades on stream because, well, I will if there's something there, but it's not a general thing. It's like what am I even in at the moment? Euro dollar, for example. So euro dollar is I don't sit here and do day trades or scalping with you live because I'm a swing trader. So the reason that, in fact, most of the guests come on here, I think all of them actually, are talking about the macros, talking about the long-term ideas, talking about the fundamentals, and trying to sort of teach and show why the markets are moving, how they're moving, what moves, and those types of things, rather than it being, join the stream to copy my 5 pip gold trade. You know what I mean? Come on, honestly, am I not able to find exact data? Aizen, I really don't know what you're talking about. Oh, do you mean the bank reports? Yeah, you can. The thing is, though, bank reports are good if you want, obviously, what the banks are looking at in terms of their analysis and their thought process, but their data is the same as ours. There is no difference. So the way they interpret it, understand it, put it together and come up with ideas, that's their thing. But when it comes to how they actually find those ideas, it's exactly the same as the EdgeFinder. It's the unemployment, it's monetary policy, it's inflation, it's growth. It's all the same. We all have the same data. The only difference that you have from institutions is your ability to actually use it. Bloomberg Terminal is known for being the best data center or the best data source. The only reason it's the best is because they get headlines within milliseconds, they get data instantly. But, as swing traders, which I assume most of you are if you're in this stream, that's irrelevant. It doesn't matter for us. So that's my thought process anyway. How much have I funded? What do you mean, Lorenzo? Do you mean in like prop firms or what? In prop firms, I had 100K with Maven. I think actually Maven's a friend of the show, so I would check them out. I didn't have an issue with them. Got funded with Maven and then lost the account like 2 days later, so I didn't get a payout from that. Funded 100K with Top Step. Also lost that, but I did get I think like $3,000 in payouts, so came out on top in Top Step. But yeah, that's it. I'm more of a personal trader, to be honest. I like to buy prop firms if I want to have a little bit of a gamble, a little bit of a scalp here and there. But yeah, prop firms aren't really my thing. I backtest 10 years. I've got 5 minutes left, so if you've got any final chart suggestions or analysis that you want me to look at, let me know. I'll do it as fast as I can. I backtested 10 years bank outlook on a few currencies and found some data. Okay, fair enough. Is it fair enough to take our fundamental analysis from Forex Factory only? No, to be honest, no. Look, if you can't afford the EdgeFinder, first of all, they've got a free week. I'm like 99% sure the EdgeFinder has a free week on right now. Do that, because it's the best you will find, especially for interpreting and understanding data as a new trader. It's fantastic, even for experienced traders, obviously. But if you really can't afford it, go to Trading Economics. Don't use Forex Factory for building a trade idea. For a calendar, whatever, fine, sure. It's a bit slow, it's a bit crap, but it works. But for actually looking at data, gathering data, building ideas, Trading Economics and the EdgeFinder are all you need. Trading Economics is free, by the way. That's why I'm saying that. But I would always say the EdgeFinder is the #1 choice if you can afford to buy it. By the way, you can use code ELITE for a discount if you don't already have it. Check out Aussie Yen. We did look at Aussie Yen. I was saying it's still a bullish pair. I mean, the yen will stay pressured, in my opinion. I don't think there's any arguing really against that. But I think short term, it is in for a little bit of a decline before continuing higher. So in terms of actually looking for trades, I'm just not very interested at the moment. Maybe if we could pop back above this 200 moving average on the H4, maybe we could look to buy this dip. But to be honest with you, I'm not overly happy about buying the Australian dollar. Again, as I've been talking about, I think the opportunity cost of buying Australian dollar yen, it's a little bit too high. I think there's better opportunities in the markets right now. Trading Economics, yeah, that's right. So Euro New Zealand, yeah, so it's similar to Pound New Zealand. The only thing is Euro New Zealand's just not getting a bullish reading on the EdgeFinder. So rather than trading Euro New Zealand, its best option is just go to Pound New Zealand. It's basically the same technicals, but the only difference is Pound New Zealand is getting that bullish reading on the EdgeFinder. It just gives you that extra bit of support in the trade. What is that? Hold on, let me just drag this over a little bit. Okay, no, sorry, I just wanted to check something. So yeah, I think with Pound New Zealand, what I would really want to see now to confirm a position is a retest of this level. So we've obviously broken it. I'd like to see a pullback into this 50 moving average, maybe even the 200, depending on when this happens or if it happens. If we see a rejection, that would be a really nice break and retest to then just continue higher, correct this left side. And again, the analysis applies to Euro New Zealand as well, because they're basically the same technicals right now. If you want to learn how I trade and how I use the EdgeFinder to find trades and build ideas, there's a free course that's just been dropped in the chat. It's made by me. It's a 30-minute video, and you also get a PDF. 100% free, no strings attached. You can go to that link and get the course 100% free. Did I manage funds? I have managed funds. Yeah, I don't do it anymore, but yes, I did used to manage funds. I stopped because I was going to move out of the UK. So the sort of laws and regulations and structure was going to change. I didn't end up doing that yet. So I had to sort of close that down before I really did anything else. Closed it down, then obviously life happens and situations change. But it is what it is. I don't think there's anything else for me to go over specifically in terms of the markets. And we've got the fantastic Alan Perez coming to take over the show in about 30 seconds. Take a look at, oh, do you mean Alex G? I've got no idea what he trades in. I don't follow him anywhere. Is Atos performing good for order flow? I've got no idea. I don't even know what Atos is, to be honest with you. I don't trade order flow because I'm a swing trader. It's not a very useful tool for me. Do I use Stockbox? No, I've been considering buying it, but because I don't trade stocks, I don't want to buy software and then learn how stocks work. You know what I mean? So it's just not something that I feel a need to buy because I'm not a stock trader. I'm not involved in that side of the markets. But again, if I was trading stocks in the way that I trade FX, then yeah, absolutely, I'd be buying it. But it's just not for my markets. Was I charging 2 to 20? No, I wasn't. I can probably discuss the structure of it tomorrow. If you tune in tomorrow and ask me the same question, I'll tell you all about it. But right now, Alan is coming to take over the show. I'm at the end of my time segment. Ladies and gentlemen, have a fantastic rest of your days. Thank you for having me. Stay safe. Don't get margin called and don't go anywhere. Alan is coming up.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Hope you guys are having a fantastic morning, fantastic evening, wherever you are in the world. Let's go ahead and talk about what's going on here today. So we did have jobless claims this morning, came in just in line of expectations at 210K. So the reaction on that was pretty muted there. If we actually look at currency performance here, currency strength here for the day, you did have in the early part of the morning here, you did have the dollar index significantly stronger than the others. And then you had the risk currencies like Aussie and Kiwi here lower today. We are starting to see a little bit of shift in that. But again, that is subject to what happens, later in today. We did have some interesting headlines here right before I came on. Essentially, Iran is now awaiting the other side's response to its position on the American proposal. Essentially, they went ahead and responded to the potential agreement. And so now they're just kind of seeing, what happens there. So initially, it did get dollar lower a little bit, but as of now, the reaction is somewhat muted here. You can see here actually following that comment, you can basically, let me go ahead and find that. Iran's assessment is that the proposal is one-sided and unfair, serving only U.S. and Israel. And at this stage, they're actually not looking to go ahead and move forward. So again, right here it says there's no arrangement for negotiation and no plans to talk, until it seems realistic. So the reaction was somewhat muted here, seeing some dollar strength come back into play. And you can see that here by the yields as well. So U.S. 10-year yield, actually, let me go ahead and delete this. This is from the Telegram post that I put this morning here. And again, join that. It is completely free, free value. You have giveaways, you have promo codes to prop firms, bonus content, all that good stuff, all in the Telegram channel, free to you. And we would love to have you in there as well. So you can see here that yields are essentially higher here today. They've been kind of chopping around here, the 10-year yield and the 2-year yield as well. The 2-year yield is a little bit higher here. And that will essentially answer most of your questions regarding price action. Is gold up or down? Are stocks up or down? Is the dollar going to be down? All that good stuff is pretty much determined by the yield, right? The yield curve. If bonds are down, yields are higher. That implies that there is less rate cuts ahead. And markets do not like that. That is tighter fiscal conditions. That's better for the dollar, worse for stocks, and worse for gold in this case because it does pressure that non-yielding asset. So as of now, I'm essentially positioned long dollar here. So I'm kind of targeting this 100.5 level here, this level of resistance. And then I'm just going to trail stops along the way and try to trim my risk as soon as I can, when I can, because I do think that now you do have the possibility of some kind of talks happening. Before it was one-sided. You had the U.S. saying that they were going to go ahead and or that they were having conversations, and then Iran will go back and say, well, we haven't responded or anything like that. They've sent us stuff, but we haven't said anything back. Now you're starting to see a little bit of shift where now there's an open line of communication, which is good, in my personal opinion. And so there is a possibility now that you do have, a potential ceasefire in the Middle East. Now, there's a lot of speculation as to the nuances, and maybe, this is just the U.S. trying to buy time before we have, troops are arriving there, and then we go into, boots on the ground type stuff. I don't know, right? For now, I'm just letting price action tell me the story, because at the end of the day, that's the opinion that matters, is the price and what yields are doing and what the prices of oil is doing and all that good stuff. And for now, I do see that there is a potential for dollar index to continue higher. So I'm just going to do my part and manage risk, and be prepared for whatever happens. So I talked about yesterday essentially what my positioning could look like if you do get a ceasefire, and I'll go ahead and expand on that today here. So yesterday, if I pull out my journal here, I wrote it down. Um, 3 positions that I had. It was really 4, but I'm gonna narrow it down to 3, just because I don't want to play the yen, going against the yen, because I do think that there is a risk to the downside for things like dollar yen. But I was looking at dollar CAD, Kiwi dollar short, euro dollar short, and as of now, I am in Kiwi dollar short. It's in profit, and I'm in euro dollar short, and that's slightly in the negative still. However, my net positioning is slightly positive there. If we do get and this is just me like drawing stuff on a chart, right? So take this with a grain of salt. Technicals are subjective to the individual, but for me, I'm kind of just looking at this little channel here. If you get a break below here, a hold, then I'll just trail my stop here and trim my risk below this level. If not, then it is what it is. But that's kind of my outlook there for the euro dollar. For Kiwi dollar, it's already in profit. I'm trailing it as it goes. However, there is a possibility that if there is a ceasefire, then you do get some money flowing out of the dollar going back into risk assets. And so in that case, my stop loss will get hit, if I'm trailing, depending on where it's at. However, you will get dollar lower, and then I would just look to ultimately get a re-enter opportunity to go short the euro and to go short the Kiwi again, right? Reason being is because the fundamentals behind those currencies, those economies, are not looking the best. So if I go to macro scanners here, equals a price index, you can see here that the dollar is still somewhat strong here. The euro is a little bit weak there. And the Kiwi is also weak as well. So I like to see that. If you just look at the top setups page, wrong one. If I go to top setups and I just filter for anything with US dollar in it, you can see here that you're seeing euro bearish, Kiwi bearish, dollar CAD bullish. So that's why I like those currencies. Ultimately in the favor of dollar. I just got to wait for that, brief pullback that we would probably see in the dollar index as you start to see, some rate cut probabilities start to shift more into neutral to maybe dovish camp. Again, I think another big thing is you have to see how long it will take for the temporary spike in oil to go ahead and pass through the economy. And that's not just for the US, that's just for everyone as well. So that's kind of what I'm eyeing here. But for now, I'm just going to monitor risk, trim my risk as I can, and just play it from there. But one thing I am looking at is obviously the headlines to see if there's potential escalations, de-escalations. Seems like Trump's going to start talking now, so maybe you start to see some things come in the feed here. But essentially, that's kind of what I'm playing here. One thing I do like as well with the positions that I'm choosing, if I do decide to go long dollar, is that I'm going to be in positive swaps. So I'm currently in positive swaps now, but adding that dollar CAD positioning into that, risk that I have on the line will be favorable as far as my positive carry. All right, let's go ahead and look at the chat here. Is Marco on today? Yes, Marco is on today. He'll be on in about a couple minutes here. Bala said, I haven't looked at the reports in months. Yeah, you know what? Like, it seems like the market's really not caring too much about that sometimes. Like for example, NFP and unemployment rate came in a little bit weak there. And the dollar just firmed up. I think the bigger driver is what's going on in the Middle East, of course. Since the shutdown, looking for a pullback at USD CAD at 137,400. Yeah, let's talk about USD CAD because that's one that I don't have on the line. I don't have any trade on that one, but I am looking to open one if I get it. You are seeing here, if I go to the daily time frame, that 200-day moving average here in yellow, you can see that right here. We're currently trading above it and as well as that 50-day moving average. So that's actually good as far as, technicals go, right? The momentum. Depending on where dollar CAD is when you do get the pullback, if you get a pullback, right? So let's say dollar CAD is trading, when there's a ceasefire happening, let's say dollar CAD trading at right here, right? That is a really big circle. Okay, let's say dollar CAD is here. What would I look to do? Well, I would probably look to do a pullback into this 200-day moving average or even like 1375. Yeah, so it seems like you have that right on the ball there. This level that was once resistance, we broke out and now turned into support. So that's kind of what I'm looking at for an entry, opportunity there on dollar CAD. I like it to the upside. Another reason why I would like to pursue dollar CAD in the event that there is a ceasefire is that the Canadian dollar is likely to weaken on top of the already weak fundamentals that it has. Canadian dollar is somewhat pegged to oil, and I've said this many times on the stream, so I'm sorry if I sound like a broken record. But if oil does well, the Canadian dollar tends to do well. If oil does bad, Canadian dollar tends to do bad. So if you do get a ceasefire and Strait of Hormuz opens up, oil price comes down, and then indirectly the Canadian dollar will also be down as well. So that's kind of what I'm looking for as far as dollar CAD. What I should have done, and this is me speaking in hindsight here, is I should have bought dollar CAD here, because that means I would have been in the position already. And if you get like a pullback, this wouldn't really hurt me. I'd just be at break even. I could probably add size, whatever the case may be. But I didn't do that, right? So essentially, I'm going to wait for a pullback into this level here and see if I can enter. Another thing that I'm going to do most likely is, depending on where price action is, whenever you do get a ceasefire, is, let's say price action is super, super elevated right over here. One of the problems I always experience is that I am too conservative on my pullbacks. I try to wait for a deep correction. So what I could probably do is, let's say hypothetically, price action is right here. There's a ceasefire. I would probably open a half position size here at the 200-day and open to another one here. That way, if price is giving me shallow pullbacks and shallow pullbacks and quick moves up, then I don't miss out on at least something. But that's the one thing that I have experienced this year that has not really served me the best. But I'm going to try to be better at that, is not be too conservative when it comes to those pullbacks. But yeah, that's just going to be my game plan here. If you do get a ceasefire, is ultimately waiting for the dip in dollar, but then pick it back up, because I do like the fundamental story in the U.S. The economy is really resilient. When you think of rates and rate projections compared to everyone else in the world, the U.S. is going to be elevated. You have real yields in the U.S. You have positive carry if you're going long U.S. So I just like that. A lot of things are in line with that, and it aligns with my trade plan there. So that's kind of my thought process on anything U.S. dollar. Okay, econ maxing. You said something here in the chat. We'll go ahead and see what happened there. I think something new happened. But Econ said, Iran rejects U.S. proposal delivered via mediator, vows to continue fighting. Okay, we'll see. Hey, Ellen, are there any day traders you personally vouch for? Man, that's a good question. I don't know. Christian, day trading from the resale side of things is really difficult. I like the idea of day trading stocks. Makes a lot of sense because you can find a lot of inefficiencies. So Lance Brightstein out of Chicago Trillium, I think he's a good guy. He's very realistic. He doesn't give you any BS. Like what he's gonna say is probably gonna sting a little bit, but it's the truth. I like him for day trading, but he's day trading stocks mostly. I think it's really hard to day trade efficient markets like futures, equity indexes, and Forex and stuff like that. And I think by day trading, you mean scalping. Day trading, like intraday or swing trading, stuff like that, it's possible for sure. But if you're like trying to day trade by looking at a 5-minute chart, 1-minute chart, stuff like that, it's very, very difficult to do. And I feel like a lot of influencers, they kind of promote like this idea that you can adopt a institutional day trading scalping strategy on like a Forex or futures market, whatever. And I think it's really difficult to do that, especially nowadays. Like, for one, those methods are obsolete at an institutional level. Like, that was back. You're talking 20, 25 years behind. Now you have these intense algorithms that are doing most of the work. And in fact, like a lot of institutions now, like the way they approach markets is when they're either taking on risk for a client, for a big client, or they are market neutral. So essentially, they're taking both sides and they're collecting the fees and commissions for executing those trades. And if you think about it, if you have the ability, I would be market neutral too. Like, who wouldn't want to be essentially risk free and just collecting commissions and all that good stuff, right? I think the days of like discretionary day trading at a bank and stuff like that revenue stream has shrunken a lot. It's now more market making and taking orders from client accounts, all that good stuff. So yeah, that's my opinion. But essentially, like, you know, what you see is already baked into the price. That's the thing about day trading or scalping efficient markets like Forex and futures. And to take a step further too, like Forex is decentralized, right? Like there's no like level 2 data that you can see or like a very dense order book and stuff like that. Like it's decentralized. What you see from one broker is different from another broker, and in scalping world, every single pip matters. So if you know you're going up against that, then it's probably better to go ahead and do swing trading, in my personal opinion. When you look at markets from a broader scope, then you are starting to see, and you can act on the same information that all of these institutional players act on, which is macro, interest rate, longer term trends, and you can ride those trends a lot better than trying to scalp a 5-minute chart on a decentralized Forex pair. But that's just my personal opinion. And two, like, yeah, I'll just stop there. I can go on and on and on. My friend Marco here is here in the background, so he'll probably come back here in a second here. Let's go ahead and see how much risk when you take 2 positions in one pair. I try to stay within 1 to 2%, and I can split that however I want. So, for example, let's say I'm already in 1% with euro, dollar, and Kiwi dollar, then I'd probably put in a half position on dollar CAD or something like that. But I try to stay within 2%. Hey, Marco.
Hello. How are you?
Pretty good. Pretty good. It seems like we have Iran went ahead and sent back a proposal, as far as, or not a proposal, but I guess a reaction to whatever we sent over there. So
Was it positive, negative?
it's kind of mixed. So they sent it back,
Okay.
but they said that the agreement was one-sided and that they're not looking to go ahead and move forward or something like that, from what I've gathered. But we'll see. Trump is speaking right now, so he might just say the complete opposite, and so you'll probably see some back and forth there on the price action. But it seems like, my personal view on this is that good communication is better than no communication. So
True.
that's kind of how I view it. So I'm just trying to risk or trim risk when I possibly can, to kind of stomach a potential reversal, and then just being prepared with what trades I'm going to take if you do get that ceasefire, stuff like that. If you start to get a flip from risk on, I'm just trying to gather kind of like a strategy or things on the sideline that I can start putting on if that happens.
So essentially, you're still positioned pretty much the same as yesterday and the previous days, but you're looking to maybe flip if something prints on financial juice.
Essentially, yes. So I'm still in the trades, and in fact, if you do get a de-escalation, I'm actually looking to stay with that thesis there. That's as far as long dollar, but it will come with a short-term drop in the dollar. So I'll probably get stopped out, and then I'll wait for the time to re-enter, because I do think like short to medium term, you have the dollar is going to be the higher yielding currency. You have still underlying worser conditions in things like the Eurozone and in the Kiwi, for example. So I do think that, that dollar drop will probably be short-lived, in my personal opinion.
And what do you think, what would be the next narrative after the war de-escalates? So do you think we go back to artificial intelligence, or do you think something else is going to be on the horizon? Because as far as I got from really closely watching the macro and fundamentals, it's always one thing that is in the spotlight that every single expert is writing about. I mean, a couple of months ago, it was artificial intelligence, but now every single person writing about AI is writing about US and Iran. So what do you think? Is this narrative getting a bit stale? I know it's getting a bit stale in terms of the markets. The markets are not really moving. They're kind of staying in the range, as well as with the price of oil. By the way, I filled up my car like a couple of minutes ago, and the price was, I think, 25 to 30% more expensive. So you can really feel it. I think it went up 25 to 30% just in Croatia. So you can definitely feel the effects of the whole conflict. But watching the markets, it's getting a bit flat. It's getting a bit, I don't want to say boring because it's a war. I just think possibly if we get a de-escalation, there's going to be some sort of a new narrative that comes in.
I love that question. And I think it's very important that you have to be proactive in finding what that next narrative is going to be, because markets move really, really fast. And it feels like markets are, they have a short attention span, just like how humans nowadays do. When you have like this short form content and stuff like that, like they can get bored and they need to find the next thing. In my personal opinion, I think that the next narrative would be, or the one that I'm paying closely to, would be interest rates and which central bank is looking to start opening that or turning on the engine for rate cuts. What they're saying, what their approach is to addressing the temporary spike in oil, right? You have like ECB at one point was pricing in 3 hikes. Now there's 2. And Lagarde, I think, was on this morning as well, early in the morning, and she was basically saying like, yeah, we're going to be pretty neutral. We're ready to essentially look past this, versus like something like the Fed, where you had rate cuts on the table and then you had no rate cuts for this year, and now you have the possibility of one rate hike. So just kind of seeing like where central banks are relative to each other and seeing which one's the more dovish one and which one's the more hawkish one. I'm going to try to play that angle the best I can. As far as like equities go and stuff like that, when it comes to US equities, I think the story will still be US yields, US rate cuts, and see like, what the Fed is like. You also do have to think, I think also another big variable would be the next Fed chair, what his stance is. Because, Trump has an objective to lower rates, and that was his whole thing this year. And now all of that is questionable because of the war and stuff like that. It definitely disrupted that. So I'm curious to see how the next Fed chair will address that and see if he delivers on that or what. But to answer your question, I think it'll be interest rates.
Interest rates, yeah. I mean, we're gonna get, if we get an actual de-escalation, we're gonna get definitely a market reaction. Oil is gonna sell off, and the dollar will probably sell off as well. Stocks go up, but after that, it could be with central banks, absolutely. Especially when it comes to currencies, we know a lot of them flipped hawkish. Like I was paying some attention to the recent central bank meeting of the Norwegian central bank, which is like a Forex minor pair or even an exotic, and they're getting hawkish as well. So at the moment, as it stands, every single central bank is trying to prepare for a prolonged conflict, which then of course translates into higher oil prices and inflation. But if we get a de-escalation, then it's going to be all about who flips to dovish first, which could lead the way and paint some trends as far as the currency market goes. One thing that I'm still seeing is the Aussie dollar is getting weaker and weaker. Staying at this support level, trying to go through it. Looks like we are rejecting at the moment, but we definitely seem to be going lower overall as the dollar catches a bit of a bid. And as the RBA gets or stays hawkish, while all of the other central banks are catching up and being hawkish, so maybe some sort of a repricing is happening. So are you still looking to buy AU lower, or are you a bit patient on it?
I'm gonna be patient on it. I'm gonna actually like put less of an importance on it. You mentioned to me Brent Donnelly's stance on Aussie dollar, and it's becoming more bearish. I was going to ask you if you were open to the idea of shorting that Aussie dollar pair. I was looking at your chart here and I saw something. Essentially, it's what I have marked up here. This level of what could be support. It's been a strong one. Before it was resistance. Let's see here if Epic Pen's going to work today. Once, twice, 3, 4 times here. We broke out of it now, and now we are testing back in this level. Are you looking to open it? I feel like if you were to get some kind of a surprise in the market where the U.S. starts firing at Iran, you have a severe escalation, then you do have actually a real vulnerability to risk currencies like Aussie dollar, especially if gold comes lower. Because Aussie dollar and gold, they have like a funny little relationship there. If you were to see a fall in the Aussie dollar, are you looking to kind of, short it on the way down here, maybe to that 200-day moving average, or are you still being more patient and more, mindful of the upside opportunity that it could have? I asked that because the Aussie dollar story, the Forex scorecard here has went from a very bullish reading to now -4, borderline bearish reading there.
Yeah, I would be down to sell if we get the break of that support, and especially if we get the EdgeFinder confirmation. So if we get a confident break of support with a nice red candle, possibly even a clean close right there, definitely I wouldn't want to see a huge wick. Plus, if the EdgeFinder can turn fully bearish, I know it's pretty close. We're looking for a -5 here. Can happen very easily. So possibly break and then a retest of that level. I think that could be a pretty nice entry zone. And just let me see, where's my 20 EMA? Okay. So possibly even the 20 EMA could catch up. I prefer to take entries around the 20 EMA. So that's another added thing. One thing I want to mention, if you guys want to participate in the DNA funded giveaway, I'll do the giveaway a bit later during my segment, but I'm going to post the form right now because you need to fill it out and then you'll get entered into a DNA funded giveaway. Okay. So just wanted to put that out there. In terms of the stock market, we seem to be down on the day, but not really moving anywhere. The DAX, same thing across the board. I mean, the Nikkei as well. What about gold? Gold, a little bit down, but again, mostly break even. Bitcoin just being break even. So pretty much very little movement. Plus, if I look at the Forex calendar, we don't have much news. We had some news for the Aussie, which came out. It was the inflation that we talked about. But other than that, we don't have much. The biggest news that we have is next week we have the NFP. But I do think there's a bit of a government shutdown in the United States, if I'm not mistaken, at the moment. I think it's a partial shutdown. That's why a lot of airline companies are not getting, or the workers of the companies are not getting paid. So companies are understaffed. That's why there was even an accident, I think, on an airport in the US because
in New York. I saw that. New York, I think. Oh wow! Okay, I didn't know that. I must have completely missed it. I know that was on the table, but okay, interesting.
So my research tells me there's a partial one, but I may be wrong.
Yeah, maybe you do have a somewhat of a data blackout in the U.S. But yeah, you're right. There's no news. You had jobless claims came in line with expectations, so the reaction to that was very muted. The only thing you have that I see on my screen is Trump speaking. And then you have some Fed members talking later today. And then tomorrow you have UK retail sales data, and that's pretty much it.
Yeah.
Okay.
Yeah, like the situation at the moment, I think it could be pretty boring as far as the markets go. I mean, the longer that the war drags on, yes, oil prices will keep on putting pressure on the markets. But as far as movement goes, we need some sort of a catalyst. So we need either, unfortunately, an escalation, preferably, of course, a de-escalation, or we would need. I'm seeing NFP and stuff like that coming out next week. I don't think it's going to be a massive market mover. Like the numbers just don't matter.
Yeah.
Right now, because everyone is focused on the conflict and on the price of oil. So it has to do mostly with the war in Iran. Maybe you can catch some alpha here and there if you're trading central bank events, but that's kind of what I'm seeing.
My personal opinion is that until you see, because now they're just exchanging words, right? So one's going to say something, the other one's going to say another. Maybe when it comes to like the equity market, like Nasdaq, what I have marked up here, you probably just range bound between this 200-day moving average and this recent low, unless you get a decisive, narrative one way or the other. then you could probably break these lows. If you break these lows, then you have some real serious probability that you fill all of this here and target that 22,000 level, that level of support. But until then, I do think that it's going to be some choppiness for sure. Someone said in the chat earlier that gold is really, really bad. He's upset about it. I posted this in the Telegram channel. I'll say this before I head out, but completely free value. But I try to put the best, most important charts of the day that you need to know, and the fundamentals behind it too. And I promise, if you read this every single day, it takes like 2 or 3 minutes. You'll understand what's driving the market. But for today, I posted yields, right? And essentially, I touted like the chart that will answer all of your questions, because a lot of people have questions on gold and the dollar and equities and stuff like that. Essentially, this was what happened. So you had yields, central banks as a whole were essentially pricing in the idea of lower rate cuts. They were trying to recover from the COVID shock, right? And so you finally had some movement to the downside. Then you had the war start. And so then central banks had to go neutral to hawkish. And so you pretty much wiped out all of the progress here that you had in rates. And what I'm trying to get at here is, as long as you start to see, or as long as you see yields elevated for an extended period of time, you're going to see that unfavorable price action in gold, especially in gold, right? Which a lot of people seem to be confused about. But so essentially, join the Telegram channel. Rev said, thank you for the Telegram post. I appreciate it, man. I do my very best. We also do quizzes at the end of the day too, to keep you sharp. Some are easy, some are hard. I have thrown some easy ones there in the recent days, so maybe I'll throw a hard one out here for today. But and also too, if you join the Telegram channel, you can go ahead and sign up for the free week on EdgeFinder. Give yourself a chance to try it out there. If you love it, which I think you will most likely buy yourself a copy. And it is super important to do so, especially in a time like this where markets are tricky, they're complex. Avoid some unnecessary losses by filtering out the best trades. And with that, Marco, I'll go ahead and leave you to the DNA Funded Challenge here. I feel like today's conversation was short. I feel like it flew by.
I mean, there's not a lot of movement. There's not a lot of things we can talk about. The yield chart that you sent looks awesome. I love it. It's so important, and people just skip looking at the yields, but you have to pay attention to that. Just the movement in the markets is kind of lackluster for this week, and the calendar is pretty empty. So I guess that's it.
Yeah, I agree. I mean, nothing new, and there's a very stale calendar. So we'll see. We'll monitor it. If anything changes, if there's anything that you must know that will shift the narrative one way or the other, I'll go ahead and update you guys on the Telegram channel and on the Discord as well. So we'll stick with that. And also too, join the VIP Discord channel too. You have Marco in there giving trade signals, doing fantastic. Everyone else there too, Ivan, Nick, you have Chris over there as well. So the Discord channel is very, very fun. It keeps me laughing from time to time. But we'll talk tomorrow, Marco, and we'll see you soon.
Maybe we can do some sort of a Q&A. If there's no movement tomorrow, we can maybe do a bit of a Q&A. That could be fun.
Yeah. We should also do another if it allows. But like you said, the calendar has been so stale. That long stream that we had was very fun for me personally.
Yeah, absolutely. I mean, maybe for the next central bank event, absolutely.
For sure.
Yep.
All right, well, all right, man. Take it easy.
Yeah, thank you for joining, and I'll see you tomorrow, Alan.
Alrighty, bye-bye.
See you. Goodbye. Let me post the link to the giveaway one more time. So let's go to the jot form in the comment section of the stream. Okay, you're gonna find the link to fill out the form. Fill it out, and you'll get entered into a DNA funded giveaway. So it's gonna be a 10K one phase account. If you don't want to participate in the giveaway, or if you don't win the giveaway, you can get funded immediately, or at least start the challenge immediately. Using the code A1Live, you can get 25% off any DNA funded challenge. So A1Live, 25% off any DNA funded challenge. By the way, this is my personal 25K two-phase account. Current equity is 25,286. So I was pretty close to the profit target at the beginning of the week. Then I had 2 losses on gold, which brought me down to plus 286. But past phase 1, now into phase 2, and yeah, just keeping on keeping on putting the trades. What was the equity high? 25,668. Yeah, that was the equity high, and then I got some losses from that point on. Great prop firm. I've had a great experience so far. Had a 50K funded account. Blew it, unfortunately, but it's part of the game. Now trying to pass this one and get a payout. If you want to join, just a reminder, A1 Live gets you 25% off. As far as my watch list goes, as far as my trades go, I'm in oil. I'm selling USD JPY. We are approaching the 160 level back again. It should hold. It should produce some sort of a reaction. This was the last time we approached it, so 19th of March. My game plan is to just keep on holding this position as a possible hedge against my euro dollar short, okay? Because this level should hold. As the dollar appreciates, euro dollar should go down. My trade on the euro dollar should go down, while USD JPY should hold at this level. If it doesn't hold, it should get checked by the Bank of Japan. There should be an intervention. So that is what I'm counting on. I have the Nikkei on there just in case. The reason I have the Nikkei is if we actually flip to risk on. If we get an actual de-escalation, words don't matter. Actions is all that matters. So if you get actions out of the US and out of Iran about a possible de-escalation, then it's risk on. Nikkei is the first thing I'm going to buy. Nikkei, for me personally, looks the best, looks the most attractive. I've already had a buy position on the Nikkei before the whole conflict started. And in my opinion, we can pretty much go back to all-time highs once the war is behind us. Okay? Yeah, just loving the Nikkei. It's going to be the first thing I buy. I'm probably not even going to wait for a confirmation on the EdgeFinder because I just want to get in. You know, I want to re-enter my long position that I had. Prime Minister is dovish. Government in Japan is dovish. You're getting money flowing, capital flowing back into Japan. The carry trade on USD JPY is getting destroyed because Japan is raising interest rates. So you have a perfect storm for the Nikkei to appreciate. Plus, the Nikkei massively beat the S&P 500 in the last year and a half. If you compare the Nikkei to the S&P to the DAX, I can quickly put it on. So if you put it 2025, you click plus, you click this, you click this. So check it out. Nikkei still massively outperforming both of these. Okay. That's the game plan. I can't enter again with the same email. Sorry, it's one email per month. So the form resets on a monthly basis. That is currently how it's set up. If you have a second email, you can enter, or you have to wait for 1 month for the form to reset. So it resets on the first of the month usually. Okay. It's going to be in 4-5 days. Yeah. Okay. Comment time. Sluggy says, I'm just better off not trading CHF and JPY. Is there any movement in those? Euro Swiss not moving much in the last couple of days. Yen not moving much either. We are in a bit of a quiet period. Not a lot of activity in the markets. Buying X JPY is low. IQ easy money trade, but not at these levels. Well, at these levels, I would be careful, especially on the yen. I mean, we are again near the 160 level, which is the intervention zone. So not the best level to be buying or selling the yen, right? If the Bank of Japan actually comes in, if they do an intervention, it's going to have repercussions for the yen on every single currency pair. You can look at the last time that it happened. It was in 2024, right here. See this waterfall in what was it, July of 2024, and this waterfall printed on USD JPY, Aussie JPY, NZD JPY, Euro JPY. So the yen gained strength across the board. USD JPY is so bullish fundamentally. It is, but it's not about fundamentals at the moment. It's about the BOJ. It's about a possible intervention. Let me just see. If you go to Forex on Financial Juice, if you type in BOJ, which is the Bank of Japan, what were the latest news? Let's see. I'm not seeing anything. Trump were crushing Iran missiles and drone stockpiles. So much for a ceasefire. Let's see. BOJ minutes. Members agree rate hikes. Rate hikes coming. This is going to destroy the carry trade. Okay, not seeing anything about possible intervention. Let's do Katayama. This is the finance minister of Japan, I believe. We don't have much. Yeah, we don't have much. Okay, so no news, no clear news yet. Let's just check on the Forex latest red filter news. What do we have there? Jobless claims. Other than the jobless claims, I'm not seeing much. Yeah, other than the jobless claims, I'm not seeing much. Maybe I should go through these latest. Oh, okay. Trump, Iran is begging to make a deal. Okay. Iran is begging to make a deal, not me. Any reaction to the markets? Let's see. S&P, no, not really. DXY, no. So maybe the markets have started to learn to discount anything that Trump says, possibly. Anyway, time for the giveaway. So let me grab all of the names from the submissions. (26th of March). We have quite a lot of submissions, which is great to see. 26th. Let's copy that. Put it in my wheel. Paste. Spin. Okay. Abu J, congrats on being the winner. After my segment ends, I will send you an email with the free code for or a code for the free 10K one phase account on DNA. Just as a reminder, if you guys want to get funded, code A1 Live gets you 25% off on DNA funded. So what do we have? Max says to buy XJPY pairs, I think the wise choice is to wait for the next flush down. That could be the case, yes. If you're looking at USD JPY, possibly waiting for the drop and then getting in, because as long as you're far away from the intervention zone, yes, USD JPY should just keep on creeping higher. Okay, that is correct. Once that risk of intervention is complete, then slowly rising again. Absolutely, I agree. Marco, that was a nice chart you shared by Brent Donnelly. Thank you. So I can't bring it on here because it's saved in my Discord. So I would have to share a new window. Essentially, it was a chart. I think what Sluggy is talking about, it was a chart where Trump is more dovish at the beginning of the week, and then he gets more hawkish later in the week. You can look at it from the performance of the S&P. From when the war started, the S&P usually gained value at the beginning of the week and started losing value throughout the week. So it is something that's tough to trade, but something that maybe can help you to gain an extra confluence. That's at least how it's been in the last 4 to 5 weeks. So Trump, dovish on Monday, usually hawkish on Friday. right? And that's kind of what you can see. If you look at the S&P, this was the Monday move. This is Tuesday, Wednesday, Thursday. We're starting to fall. So we're starting to create this, right? That's how it's looking. Okay, so last chart for today before I pass the stream on to Tiger. What can we look at? Let me see the US 10-year. Nah, nothing is really moving. Everything seems mostly flat. Yeah, things seem mostly flat at the moment. Let's do Bitcoin as the last thing. Or let me run through the comments, see if I can spot something interesting. Gold. Yeah, gold. We can do gold. Gold. Alan told you about the correlation with yields. Yields are rising, gold is falling. Seems like gold is acting as a risk-on asset at the moment, meaning if there's an escalation, you get a sell-off. If there's a de-escalation, you get a pump higher. Do I think this can go a lot lower? I don't know. I don't think it's going to go a lot lower. I think we have hit the first crucial support level. I think the second big support level would be 3,900, something like that. You had a massive rejection on the 200 EMA. I think most of the selling is done. In my opinion, most of the selling is done. Let me just quickly see what the EdgeFinder is saying, and then I'll flip the stream to Tiger. Bear score at the moment. Okay, bear score. Personally, I wouldn't look to sell. I'm not buying, definitely not buying, but I wouldn't look to sell. That's it. Thank you very much. Don't go anywhere because you have Tiger, and good luck. I'll see you tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Oh. Hello, everybody. Just goes to show you the market today. A little on the boring side. It's a good day for a nap. Yeah. You know what? When it comes to all the zones I'm looking at, especially on the stock side, a lot of the ones I want to buy are in downtrends. A lot of the ones I want to sell are in uptrends. So just don't have anything over there. As far as today, still keeping an eye on some of these top setups, but hoping that we can get something stirred up. We did have the unemployment claims come out, but it was only 1,000 less. So, a slight good number for the dollar. 5,000 more claims than last week, but 1,000 less than the forecast. So, good. Again, pretty much a nothing burger on that front at this time, but they are doing a cabinet meeting as we speak right now. So I know as soon as I finish with the stream, I'm going to be hopping on it just to see what kind of lip flapping session they got going on over there. Speaking of lip flapping sessions, we got a few more later, quite a few more actually. President Trump at 4 p.m. Eastern. Remember, guys, my times are always Central Time over here in Kansas City. But then we got 4 more speakers: Cook, Miran, Jefferson, and Barr later this evening, early evening, I should say. So, hopefully that can drum up some type of volatility for us. It's just been a whole lot of nothing, I got to say. I mean, working with FX Empire, I pretty much keep an eye over there on some of the major markets: Dixie, the oil, the natural gas, gold, silver, Bitcoin, obviously the fear gauge, the VIX, and then the top 3 indices, U.S. indices, as well as 10-year yields. And really over the last couple days, they've just, all the major markets have just been kind of sideways. Now, oil has started breaking out somewhat, but as you can see, it's kind of retracing back. We did push through those Tuesday highs that we had. This coming after the retracement from the Trump tweet, remember, that we had on Monday, which is this big, ugly, red expanded range candle down, the denial from Iran. And then ever since, I think traders overall in these markets have just been, trying to pick a direction, just waiting for something to break out. So I think the main thing I saw so far was just the oil breakout, somewhat. It did get a closed candle, but as you can see, it's kind of retracing back. So I'm sure, part of what President Trump is trying to do right now is continue to calm the markets. I'm assuming in the cabinet meeting. Okay. A lot of lip service to that, as always. So, perhaps that's going to help for a little bit. But other than that, natty gas, okay, the natty gas, it is kind of pushing out. Now, it's kind of interesting looking at natural gas. I know we don't mess with natural gas on this stream very much, but it's very interesting how it's drawing us out our master pattern. Okay, taking a look here at this consolidation, we're getting that breakout to the bottom side, liquidity sweep, lower low for liquidity sweep, higher high for liquidity sweep. So that's your expansion legs in real time. Okay, that's exactly what that is: consolidation, expansion, and then at some point we want to find that trend leg. So I just thought that was interesting to note over there on the natty gas side. As far as gold, silver, obviously they are pretty well retracing over the last handful of days, but silver and gold are still on my bearish list. The challenge is I just don't really like where the supply zones are at the moment. I mean, as you can see right now, silver is pushing into one. But anytime I see a supply zone this low on the curve, I typically ignore it because the more premium prices are further up the scale, closer to the origin of the overall strong move down. So, I could take a little chance at this, but I just don't think it's that much of a reward. There's much of a reward in it because there is a demand zone not too awful far, underneath it, 30-minute demand down here. We got close to it, but, $1.50 of earnings potentially on a silver. I don't think I'm too interested in it, especially since we had a big, lovely gap preceding this supply zone. So I would think we'd probably be going a little higher up, probably to this area here. I'm going to keep an eye on it. In fact, I need to move my okay, so here's the thing. I've actually got my alert further up, and I haven't moved it since yesterday. It's basically at that 75 psych level. I'm not worried at all about any of these candles in this area. Okay, we're looking at a 4-hour chart, but no matter what time frame I drop it to, this is as efficient as price structure gets. There's no gaps at all. Wicks and candles and everything are overlapping the ones preceding it. So really all of this right here, I'm just not that excited about. That's efficient. I'm looking for inefficiencies. Now, we do start to get a little bit of an inefficiency right here. So perhaps what I'll do, now that I'll just delete that, perhaps what I'll do is see what happens if and when price retraces a little higher, because I'm not interested in this one down here. It's too small of a time frame. Again, it's lower on the curve than I prefer. Even this one is cutting it close, but I have the benefit of knowing that all the candles preceding it going up to that swing high are efficient. There's no gaps. There's no inefficiencies there. So perhaps I'll keep an eye on this supply, and if it fails through this, then I'll still be more interested in this 4-hour zone I've got higher up. Or actually, this was that. Remember, you guys, this was that 10-hour zone. I think I drew up 10 or 12-hour because I've got a double top. I think we got some liquidity going on right here. Okay, we got some buy orders hanging out right here from those short sellers that pushed price down, and the same thing over here. Okay, so I think there's some liquidity right there inside of the zone of unfilled supply. So that's still my overall favorite. But as you can see, and I like that it pushed away like this because, that's what created the double top. So that's probably still my favorite, like high priority play or top priority play, if you will, is to wait on this feature here. But yeah. I still do want to see, though, what happens if and when we return to this, this supply here, only because all this is efficient. If I'm just looking at this smaller time frame, swing high and swing low. So I'm going to actually move this up here and ignore the one that I drew up initially. So there we go. Partial position here. If all my odds enhancers work out, it'd be a partial position. If it blows through it, no worries. This would appear would be a little more of a fuller position. I think it's a higher probability, if you will. As always, guys, let me know if you have any assets you'd like me to look at. I'll be on to close the day out here. Got about 20 minutes, so if you have any tickers or anything, definitely holler at me about that. I'll chart it up for you. Let's see here. So yeah, euro. I was just going to look at some of these top setups over here. Euro dollar, obviously, it's one of our bearish assets. And yeah, see, this is what I'm talking about. And this is why everybody's, just kind of sitting on our hands right now. Higher highs and higher lows on a bearish asset. We're looking at a 4-hour, 2-hour, 1 hour, doesn't matter. Just makes it a little sketchier about trying to be short in any of this stuff in this area. So similar to silver, I've got a spot a little higher up that hasn't changed, 116.88, call it 11700 psych level for possible shorts. This obviously is my impulse leg, remember. Okay, so let's draw this up just so you guys get a visual. So here's my impulse leg down. That's currently the leg we're inside of. Now, and we have had a little bit of movement from this area back in the past, but as you can see, higher highs and higher lows. I just don't like that on an asset I'm trying to short. So probably just skip all this. There's definitely going to be liquidity over these tops. There's definitely going to be buy orders, okay, for all these short sellers that pushed price down for the impulse leg itself. So that's why I'm still keeping an eye higher up. But look at it. We're 100 pips away at this point. So this may not even be something that hits today, tomorrow. This may be a next weeker type of thing, assuming the EdgeFinder continues to give us a bearish signal. Let's see here. And as far as, let's see, yeah, Kiwi dollar, I know that one's there. Dollar yen, let's go look at those. Okay, let's look at dollar yen first. So yeah, obviously we had the big strong up, and just like many of the currency assets we're looking at, and not to mention other major markets, everything has just been kind of basing and going sideways all week, waiting to get some concrete info between the military and Iran, because today was actually when I think it was President Trump had said that they might be meeting up. They said at the earliest it would be today. Sorry, my nose is itching like crazy. They said today was the earliest that they would talk. Now, today I did notice where they're talking, it sounds like there's a possibility of Pakistan acting as an intermediary over the weekend. I need a haircut, by the way. I gotta hit up my cousin. He's got a barber shop. So I'm gonna go get a haircut soon, so I don't look so emo. I know somebody commented that last week, talking about me looking emo. My goodness. But yeah, I'll get my haircut soon. Anyway, so yeah, that's another possibility. Now there's a lot of possibilities being floated right now. Not a ton of concrete info. So hopefully they get that done. Hopefully they can talk, cuss and discuss, and come up with a plan to close this all out. But we'll see, guys. It's just nothing but wait and see. It's hurry up and wait military style. Okay. Hurry up and wait. Hurry up and wait. But anyway, just going back into dollar yen. Of course, we do still have over our heads a little bit of the intervention risk. Okay. We're getting there at a 159.5, as you can tell. So I don't know. Did we even touch 160 back here yet? Let's go double check that. We got close. Okay. So we got to 159.9. So if you guys remember, I think 2-3 weeks ago, 4 weeks ago at this point, I did talk about the fact that we do have this overhead supply, higher time frame supply zones. I mean, if I were a betting man, which I'm not, I try to use probabilities in my favor. But if I were trying to take advantage of a intervention risk, well, heck, I'd be looking back here at this daily supply, which is tucked inside or nestled, if you will, inside of this weekly supply. So much higher time frames, obviously, but hey. Okay, and just going back, we'll take a look again, the weekly supply. So here's our weekly, and remember, there's our daily. So the daily proximal line is basically 161.25. And just keeping with our theme about breaking structures, guys, you can tell this weekly supply over X amount of months continued dropping and broke structure. Okay, broke structure. So that tells me that we've clearly got some strength up there. That strength had that supply, that swing up, okay, that rally base drop, whatever you want to call it, had the power to completely wipe away all of these gains, these multi-month gains. So, and the other thing I like about this supply is how quickly. So look at the velocity of these candles. The velocity of these candles down are much stronger than the velocity of the candles going up. See, that's momentum I like to see on all the time frames I'm looking at. It's no different whether I'm looking at a monthly or a weekly or a 5-minute chart. If I see this type of velocity coming out that's less than the opposite, okay, less than the leg up or the impulse leg, then that tells me there's some power in there. And then you start looking at the VSA candles down here. See how they're growing? I like it. I like it. So if I were a betting man, if I were trying to take advantage of an intervention move on the dollar yen, then yeah, I'd be personally looking up there. Now, if the intervention happens, it may run off and leave me, right? It may hit 160 and the bottom might fall out. I don't know. But again, I don't really look at just the psych numbers or the psychological numbers because, for me, that's where the supply is. So we'll call it 160.33 where I'll start taking a look at it on the weekly. But the reality is 161.25 is probably where I would be looking, if I were to put money on taking that short. So, but again, it may run off and leave me, and I'm fine with that because at the end of the day, it's a super strong overall move up. So it's a trend fight, fighting a trend. But anyway, that's dollar yen, just coming a little closer to home, back to the hourly chart. Now, as far as taking advantage of a long, since EdgeFinder has given us a bullish look to it, we have finally pushed through this supply zone. Remember, we had this 4-hour supply right here, and I wasn't too worried about price bouncing off of it and going down because remember, even though we had a really nice velocity candle or expanded range candle coming out, it still did not break structure. It didn't even make it to the demand zone. So because it failed to do so, we started recovering and that I felt like it would probably chew through it. Now it hasn't really. It finally closed on. It was a smaller time frame of 15, I think. Yeah. So far we've really only had a 15-minute candle close above it. I would feel a little more comfortable if I get an hourly candle close above it. If that happens, might possibly, for lack of better opportunities out there right now in this market, might be interested in this little 15-minute demand down here. Okay, so that's 158.85 level as far as where that's at. And I do believe I use Oanda charts. I know I know everything is some of these charts can be different. What source do I use? Oh, I'm sorry. That's an FXCM chart. I thought I was using Oanda. I may have to look at all my charts, my sources again, because I know Oandas seem to be a little bit better, but nevertheless, it's going to be relatively the same. So So yeah, dollar yen, that's where I'm at. Okay. Now that we finally pushed through this overhead supply, that opens up this zone. If we had bounced into this supply zone, and right there you can see our dashed line, which is our 1 hour confluence. If we had bounced into this and come straight down, I would not be interested in a dinky, tiny little 15-minute demand zone. But because we did break through the rest of the supply, that opens it up, because that tells me that there's a pretty good probability that there's some strength, underlying strength at the origin of the overall strong move up, which is a demand zone. So there you go. That's my move on dollar yen. Again, it's a ways away. That's what, 60 pips away. ATR on the dollar yen is about 127 pips last time I checked. Okay, 116 actually. Okay, so it's dropped a little bit. But still, whether that hits tomorrow or whatever, I would prefer it wait and hit on Monday or later, or Sunday for me here in the U.S. Since I'm in the U.S., that's when the market's open, the FX markets. But yeah, that's what I'm looking at for dollar yen. What about Kiwi dollar? That's our big short right now. No pun intended. So on the Kiwi dollar, yeah, nothing really has changed. Still looking at the 5,900 level. What did I draw up down here? I did draw up another supply. Was that a 1 hour? Yeah, 1 hour. So here's the thing, guys. I drew up this supply, but the reality is probably not going to be interested unless it does exactly what dollar yen did and breaks through the rest of this demand. If we get a drop and close below this demand, then that'll open up this dinky, tiny little supply zone. But probably I would still avoid it, because the reality is, guys, we're talking a 4.5 pip range on that zone. And that's pretty much too strong. I think I've told you guys before, me personally, I don't want to go any less than about 10 pip range, especially if I'm starting to, try to scalp on a smaller time frame. That's, yeah. And now that I see the size of that, I'll probably just ignore that, especially because we're still in these demand zones. So yeah, we're going to ignore that. I'm going to leave my alert clear up here. It's a long ways away, guys, but look, to me, there's just nothing here in this chop zone. This is just one big retail chop zone. I told you guys yesterday, for me personally, I don't like to diddle in the middle. I like to wait for those more extreme zones. And to me, the more extreme zone is further out. We're clearly in a discount zone if we just look at this thing overall. So I don't want to be shorting down here, especially until we chew through this. Now, the whole script changes if we finally bust through the downside. If we get a close down here somewhere and then a retracement, okay, then I'll be open to some of these newly created supply zones at that point for shorts. In fact, I would, down here would be the opposing higher time frame zone that we could take our profit to. And I'm going to actually draw that red. So that's it, guys. I mean, just taking a look at the top, 3 or 4 or whatever I just looked at, the pictures just aren't very pretty. And I echo what Marco and everybody else said. It's just one of those days where we don't want to, it might be a good idea just to sit on our hands. I mean, the only alert I've had hit of late was my Bitcoin alert, which I think it's still pretty much inside of the zone. Yeah. But what happened? It fell off my bullish list. Okay. Bitcoin is down to a +3, I think. Yeah, +3 with only 1 point of strength on all 3 items we track. Okay. The trifecta trio of analysis, talking about fundamental, sentiment, technicals. 1 point. Okay. It's a +3. Now, I'd rather buy it than sell it. Okay. Gun held to my head. But that's just not a very strong score on any of these fronts. And I don't want to get in a trade just for the sake of getting into a trade. CS integrated. Do I think the Bank of Japan will intervene at 160? I have no idea. I have no idea, my friend. I think I might have shared with you guys before something to check out sometime. Let me see. I'm looking for Fred. Where's Fred at? There it is. It's something to do in the meantime until it either does or doesn't is just go to this fred.stlouisfed.org. Click home, category, money. You can always rewind this live stream if you guys need to see this again. But yeah, just click down here on Japanese interventions and it'll actually show you the history of Japanese interventions. Okay, the major ones. So looks like 2024 was the last time. And you can actually max this calendar out and it'll show you where they either bought or sold yen to manipulate price. So what I would say to do in the meantime is, to kind of answer your question, but more so to teach you how to fish, right? Is just go to all of these time periods on a 1-day chart. Okay, and you can actually, I think, zoom in a little better. Yeah, you just click and drag and let go. And you can go to the exact dates where they intervened, or at least where it was reported. I assume it's the same day they were intervened. And then, yeah, August 4th, 2011, just as an example. What is that? October 30th, 2011. And just go to a daily chart of dollar yen and check it out. So, this will be something good for you guys to look up. I just think it's awesome. I've done this before just as an exercise and just going to every one of these time periods. I mean, let's just do one together real quick. Halloween 2011. We'll just do one real quick before I get up out of here. Where you at? Dollar yen. My mouse, I got my settings too sensitive. I got to fix that. Actually, I don't even have to do that, do I? We'll go -10-31. See, look at this. See that big, lovely daily spike right here? And that's back, that's back when we were in the 70s. Okay. 370 pip move ish. Oh, it's more than that. Almost 400 pip move. So it's a really cool exercise to do, guys. But yeah, the answer is nobody knows unless we're an insider, unless we work for the BOJ. If you work for the BOJ out there, let us know. We would all love to know on here if and when they're going to intervene at a specific price or a specific date or anything. I will say, though, speaking of Japan, the Nikkei actually popped on our list as of this morning. And it looks like it might have popped off. Okay. So it was briefly on there, the Nikkei. Yeah, it's down to a +4 now. But see, just like most of these other assets, the Nikkei just wasn't really given. First of all, it's in a downtrend. Okay. Let's just get our multi-view up. Yeah, so there you go. Nikkei. Okay. It's just been straight down. My 8 is below my 21 EMA. And, so I'm not trying to be buying with a downtrend like that. 4-hour chart, okay, downtrend. And I kind of drew it up this morning when I was giving my pre-market video on my FX Empire gig. But I wouldn't be interested in buying Nikkei unless we started breaking, making some higher highs and lows. That's just me personally. I don't want to catch a falling knife. I want to wait. I want to let the retail crowd do it for me. Or the banks, right? The institutions. Have them get involved and start pushing this thing up. But again, it really doesn't matter at this point because it's falling back off. Let's see here. I think I went over that. Take a look at just a couple of these majors real quick, guys, before we pop up out of here. So yeah, I'm just going to ignore that Bitcoin. Technicals looked okay, but the fundies and everything are not. Aussie dollar, we did pop down to some zones of demand on here. But yeah, downtrend. And we're just basically, it's a goner, guys. Here, let me shift this over to just the majors. Yeah, Aussie dollar kept so -4. Okay. So, and here's the problem I've run into on a lot of these today, really over the last couple of days. Nothing but downtrends and efficient markets. So there's no real gaps anywhere in here, guys. I live off gaps. Okay, the world runs off Duncan, but I run off gaps. So you know, if you look up here, the only potential gap I see is clear up here. But that's really not a gap. That's terrible. Oh, never mind. Yeah, see, it even touches. So I can't even draw that one up. So we're in a discount zone on an asset that's a -4. So let's just assume it was a -5 or lower. We're in a discount zone on a bearish asset. Okay, I don't want to do that. I don't want to mess with that. So euro dollar, I've already went over that. Still waiting on that retracement up there. Pound dollar, what did we say pound dollar was? Yeah, -1. Again, retail chop zone. Kiwi dollar, which is our best bet, but again, it's in a discount zone. It's very low on the curve. I don't want to be selling in a discount zone. Dollar CAD, it's getting a nice push up on a +6. So yeah, let's have a quick look at this. So we have broken ahead of supply, and I'll end it on this asset. But we did break this supply zone, so I do like that. You guys can see I've clearly drawn up a zone of demand a little deeper down. Yeah, and I'd probably stick with this. It's actually a 30-minute. No, it's a 15-minute. Never mind. I'd probably stick with this 15-minute demand down here just because, number one, it's the origin of an overall strong move up. Number two, all of these wicks and candles, pretty much all this stuff is overlapping. It looks pretty efficient to me. That 15-minute time frame was the only real gap I saw. I love the volume spread analysis activity down here. Remember, guys, I look for yellow and red bars. We have a little bit of a power, a little bit of a strong spot in this area. I don't know. Perhaps we could look at this, you know, as a little bit of a former resistance becoming support type of thing from back here. But there's just too many candles down there, and I think I'm going to ignore it. Yeah, 15 doesn't look good on any of that. So that's it, ladies and gents. I'm going to wait on that zone. Now we're ways away, 100 pips away. Dollar CAD moves 67 pips in a day on average, so it's really not that fast. But sorry, guys, it's just slim pickings out there for now. I think everybody's echoed this across the board. I mean, at the end of the day, we don't want to get our hopes up on anything that's just not a very high quality. I just think that that's where we're at right now. So perhaps the cabinet meeting can get some stuff shuffled up. Anything that comes out of Trump's mouth, whether it's true or false, could drum up some volatility for us. And then I'll end it on this. Lastly, guys, the 4 FOMC speakers later this afternoon, as well as President Trump, they're all flapping their lips. Let's see if that drums up some volatility. But with that, ladies and gents, I'm going to hop up out of here. So have a wonderful day. Please do stay safe. And we'll be back tomorrow on Friday. Get ready.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.